This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you from the CNBC-TV18 Motilal Oswal studios. And of course, this is Bazaar. We'll track markets for you. Lots to talk about with earnings, especially big ones coming after market hours yesterday. I'm Prashant. With me, as always, my colleague Sonia and Nigel. Guys, morning.
Hi, good morning, Prashant. Good morning, Nigel. And, you know, the bulls have pretty much tightened their grip on the market, right, in the last couple of days. And now with good earnings coming in from Reliance, strong cues from across the globe, looks like it's going to be another good day.
Well, that's right. Yesterday's close was very, very good. And at least now the action is away from the geopolitical issues.
Yeah.
You want to deal with the market, with economics, with companies reporting numbers. And we're getting back to that. So that's good news. Results here in India and big results coming in from the United States as well.
I think absolutely. And I think that's a relief that we're not sort of talking about missiles flying all over the place, right? I mean, you're talking about what's happening with economic factors more than anything else. So let's just sort of rewind the clock, tell you what you need to know as we begin another session. So you had a pullback yesterday, and the pullback was a continuation of the pullback that started last Friday. Friday, of course, was a big rally from the lows of the day. And yesterday it continued in a very good fashion. Actually, in the last 30 minutes, if anything, the market picked up more pace, both the Nifty and the Nifty Bank. The Nifty, by the way, it went up 1,000 points, fell 1,000 points, and with yesterday's move where it's closed, it's almost got to the 61.8% retracement of the 1,000-point fall. That's great news. 2 or 3 days, and you're basically back at these levels, right? I'll come back to levels and what next here, but just a few words on the overnight action. U.S. equities had a pretty poor last week, and there was a rebound last night. Actually, it was pretty quiet all across. Equities went up, the Nasdaq, the S&P, etc., but nothing very much else. There was no news, there was no economic data, there was no Fed speak, and the market kind of drifted higher after sort of breaking some important technical levels last Friday. So there is, of course, I mean, it's not going to be quiet like yesterday through the rest of the week because you have, 5 out of the top 7 companies in the U.S. reporting numbers. About 45% of S&P market cap reports earnings. So it's a busy one. So will these levels hold is the question. Was what we saw overnight in the U.S. just like a one-day thing, and has something sort of broken there, at least in the very short term? People are still asking that question, and we don't have that clarity yet. As I said, it was quiet, so the 10-year did nothing. 1 basis point change, 4.61. You had the dollar index, which held steady above the 106 level. Oil prices, nothing at all, about $87 a barrel, and it's been there for the last 2 or 3 days now. As I said, earnings are going to be important. Later tonight, Tesla reports numbers. There's a big plunge in earnings, which is expected. And of course, with Tesla, we're not talking about not cheaper electric vehicles, but we're talking about a robo-taxi. So it's a giant of a company, which of course, before NVIDIA took over market leadership, Tesla used to be the big leader. It used to be the Pied Piper for the Nasdaq. It used to be the Pied Piper for the broader market in the US. I mean, it still is in many ways than one. And that reports later today. So can that move markets in a significant way? We'll know. PCE data later on Friday. I mean, we've started talking about inflation for the last couple of days, but there's been a seminal change in market expectations for what the Fed may do this year. Rate cuts have been completely priced out, maybe one, and that's it. And, we're talking about a higher for longer regime, which I think we'll start talking about more and more into the rest of the week. And once we get that PCE data, which is only on Friday. Now, just to sort of tie all this back into levels, the Nifty, as I said, it got to, after the bounce, almost a 61.8% retracement. That number is 22,400, 394 to be precise. And that's the first level, which, in a way, it's a target. It's also a bit of a resistance, which the market should get to. Above that, you're basically talking about the all-time high of 22,775. There are a few other resistance areas. The 61.8 is one. The gap area between 22,430 and 22,500 is the next one, which should also act as a bit of a resistance zone for the market after the sharp move that we've had for 2 days. Near-term support for the Nifty stands at about 22,300. It's also, by the way, where the 20-day moving average coincides for the Nifty. So these are very near-term, short-term levels, but that's what we're working with. The Nifty Bank also retraced 61.8% retrace of the fall that it saw, and that number stands at 48,111. Again, so that becomes the first target resistance. Near-term support for the Nifty Bank comes in at 47,618. and that's the 20-day again for the Nifty Bank as well. Markets, as I said yesterday as well, towards the close, need to confirm that the leg down that we saw before Friday last week, is over, and slowly but steadily we're starting to build on gains. That, more than anything else, I think, is what we need to see for the rest of this week, even if we don't see big gains like we've seen over the last two sessions. GIFT Nifty will come up on your screen to give us an indication of how the start is. It's a quieter start, and I think that's exactly what we need. Not a big gap up again. So 30-odd points higher, slow and steady from here, I think will do the job. Sonia.
Oh, absolutely. I think, the bulls have pretty much tightened their grip on the market, right? In the last couple of days, you can see it in the ticker, the way the Nifty has moved. And today, I think Reliance Industries earnings will be taken well by the street for a couple of reasons. It was a stable set of numbers, a strong set of numbers across verticals. So most verticals reported numbers better than what the street was estimating. The entire telecom space, right, whether you look at Jio, whether you look at the Vodafone FPO, whether you look at Bharti Airtel, all of these indicate that this telecom space will continue to be driving higher going forward. The retail numbers were also very good. It shows the strength of the domestic economy. In fact, the Reliance retail EBITDA went up 18%. The Jio EBITDA was up almost 9% year on year. And a lot of brokerages have gone ahead and upgraded their target prices and earnings estimates on Reliance Industries. More on that later. But, I was talking about the telecom space, right? Look at Vodafone Idea's FPO. It got a total demand of 1.25 lakh crores. And not just that, look at the other player, right? Bharti Airtel is sitting at a fresh 52-week high as well. So this entire space is going to continue to get some focus this morning too. Now, the Nifty, if you look at it, in the last 2 days, there's almost or 2 or 3 days, you'd have to say, there's almost a 500-point rally from the bottom that we've seen from the 18th April low. And that just goes to show that maybe some kind of a hard bottom has been formed in the Nifty and the bulls have come back in a big way. The BJP opened its Lok Sabha tally as well. It won the Surat seat uncontested. So that just goes to show the stability of the, the current government and perhaps what the outcome of the election could be. The only risk for the market perhaps is what's happening with crude. But on that front as well, because of the de-escalation of the situation with Israel and Iran, Brent crude prices are back below $88 a barrel. So that is something that, the market is looking at. As long as there's a lid on crude prices, this market could continue to move up. So the recipe is looking good. It's a good cocktail for the markets to move higher. But then, of course, individual stocks will continue to be in focus.
Well, that's right. So now the point you made on Vodafone Idea, what subscription,
yes,
right? More than 1 lakh crore, or the market capitalization is around 65,000 crores. Maybe if they took all the subscriptions, they would be, have the debt down by half or. But that's, that's a sector that we'll be looking at. Yesterday's session was very, very good. And the Nifty's intraday chart should come up for you on the screen. It's as beautiful as ever because the final tick was at the high point of the day, telling you that this market is trending up. And now the top points to track will be the risk-on environment is back on, because geopolitical issues have taken a bit of a backseat, and that's what will support the broader markets. Towards the final hour of trade yesterday, you had a lot of small and mid-cap stocks that did well, and the breadth of the market was very, very good. Well, on the Nifty, they've conquered the 20 DMA odd. Now it appears the 23,000 odd mark is on the radar of the bulls. The Nifty Financial Services Index, well, that's going to be the one that moves in the second half of trade, so we'll keep an eye out on that one. What did the FIs do yesterday? Well, they lightened positions, both on the long as well as on the short side. On the long side, a little bit more. And that's what takes the short positioning to around 66%. The next short positions are at around 1.09 lakh contracts, which is always good. You have shorts in the system. That's what will help us. If you get a bit of an up move, the additional 200-300 points will come because of the shorts in the system. So that's viewed positively. The 22,200 call, well, that saw a big amount of open interest. Yesterday, some of those call writers, they were packing their bags. They were saying, this market's got momentum. We have expiry coming up. Let's pack our bags and get out of them. And now the action has shifted to around the 22,350 to around 22,400 odd mark. On the downside, the 22,200 as well as 22,300 put, well, both of them were fairly active in trade. Between them, they added close to around 57 lakh shares, which brings us to the range. I'm looking at the resistance zone and a support zone. On the resistance zone side, the 22,550 to around 22,500 becomes the important mark. If we can breach this, then you're looking at another 300 points in that direction, in the northward direction. If the support breaks, this is an important support zone, going by some of the technical levels, going by the options data as well, then maybe we pull back 300 points on the downside as well. So that's the important levels that I'm looking at. In terms of the exact levels, well, on the Nifty Bank, the 20 DMA has been conquered. The next resistance comes in at around that 48,500 odd mark. So that's important as well. And the sector that I'll be looking at is, besides Telecom, will definitely be cement, because Kesoram's numbers were weak. Part of the street was factoring in weak numbers. The EBITDA per ton was less than around 400 rupees per ton. But also now you're seeing aggression from the bigger names. Ultratech Cement, Adani Cement, both the two cement companies in there. So excess supply could be a bit of an issue that could weigh on sentiment as well. And since we have elections coming up, those price increases are not coming about. So I'll keep an eye out on the cement companies in today's session as well.
Okay, so plenty of sectors in focus. There's cement, there's telecom, and of course there's Reliance as well. But on the equities front, Jonathan Garner of Morgan Stanley says that Japan and India still top picks in the new era for Asian equities. He says multipolar world trends are supporting FDI and portfolio flows, while positive demographics and success in macro stability underpins a strong capex and profit outlook for India. He sees a secular trend towards sustained superior US dollar EPS growth versus emerging markets over the cycle, with a young demographic profile supporting equity inflows. Jonathan says valuations are at a premium at 22 times forward PE, but in their view, this is warranted by superior EPS and compounded growth rate.
Some money market views. Abhishek Goenka of India Forex and Asset Management says the rupee has hit a all-time low around 83.58 on Friday, but likely intervention by the RBI and revival in risk sentiment have caused rupee to come off the lows. He says the currency in the rupee and yuan have outperformed other Asian peers in April, so by a considerable margin. He goes on to say if US corporate earnings meet or beat expectations, markets may overlook diminished Fed rate cut expectations to some extent, and risk sentiment could remain stable. He says, barring any adverse geopolitical shocks, expect the rupee to trade between 82.8 to 83.6 over the medium term.
And on the bonds, Vishal Goenka of IndiaBonds.com says some calm has returned to the bond market as it was quiet on the global geopolitical front. With oil and dollar index retreating from last week, he says the important data this week is the PCE inflation and the quarterly GDP numbers from the US later this week. He says corporate spreads widen domestically as banking liquidity remains tight. He expects the markets to be range-bound and the 10-year benchmark bond yield to trade in a range of 7.17 to 7.22% as the market awaits further macro cues.
Well, we have a lot of stock-specific action to track for you. We get to that in just a bit. For the time being, we run into the list. We're looking at Reliance Industries, Vodafone Idea, Hatsun Agro, Tejas Networks, Patel Engineering, and PSP Projects. All of them will be reacting to positive news flow. But on the flip side, you have Nestle, Mahindra Financial, Mahindra Logistics, and RR Kabel. All of them will be reacting to negative news flow.
Harold van der Linde is head of Asia Equity Strategy at HSBC. He's joining us now to run us through what he's making of things. Harold, great to have you with us here. Thanks very much for your time. We just read out that call from Jonathan Garner of Morgan Stanley earlier. I was talking about how valuations are stretched, but it's justified here in India because of the superior EPS CAGR that we have going. And of course, relatively speaking, earnings growth here looks much better. Just your thoughts, Harold. Are we sort of looking good for more here in a continuous, uninterrupted kind of a way? Or do you think this year perhaps we'll see some pauses along the way as well?
No, I think if we just look at India, for the moment, it still looks okay. We do have to acknowledge that some of the growth in India that comes because the banks have cleaned up the balance sheet. So you got some nice sort of initial effect coming through for a few years. That was last year, this year, maybe even next year. At some point in time, it will peter, but I think that's something really to worry about in the future. So the growth for India continues to look pretty decent. And you know what it is, right? It's, for example, the formal retail gaining market share over informal retail. You got the new infrastructure being built and better roads and bridges here and there that flourishes trade and these sort of things. So the story from India, I think, looks pretty okay, and that's been warranted by these high valuations. The issue really is, does the global macro, is that going to help India or Asian equities in general? And for the moment, we're a little bit on shaky ground this week. That's got to do with bond yields and inflation, these sort of things.
Harold, if inflation goes, everyone thought inflation is under control and rate cuts are coming. It's not. As they say, the US 2-year heads up to 5.5%, or they say it heads up to 6%. What are we looking at then in terms of portfolio flows, and how does that influence action towards emerging markets?
Yeah, so there will be a couple of very interesting sort of flows taking place. So that's what we've seen over the last weeks, right? So bond yields have moved higher, 2, 5, 10 years in the US because, hey, these inflation numbers were not really coming down. And as you highlighted earlier on, later this week, we're going to get some more information on what the trajectory of inflation in the US is. We're still working on the assumption that prices are basically sticky and then it takes time for these inflation numbers to come down. So we're not so much overly worried yet. And I think later on in the year, we're going to see inflation drift lower and actually interest rates in the US as well. So I think we're in a temporary sort of lull. But hey, we could be wrong. So we just have to wait until data comes out and reassess that for the moment. But what does that do to flows in Asia? Now, that's interesting because at the moment what we're seeing is money's been taken out of Asia and goes into the US because the interest rates are a bit more interesting there. Now, 10-year yield is at 4.61. Hey, you can put money there away at 4.5% or maybe even 5% in certain deposits. So that's what people are doing. Money's being taken out of equities. The dollar strengthens and the yen, for example, weakens as well, and all the other currencies are a bit under pressure. If we find out that that inflation number by the end of this week is actually moving in the right direction again, and that, yes, we're on track for a June rate cut in the US, were that to happen, then that might go into reverse. The yen would probably strengthen. Money could actually come a little bit out of Japan and move into other parts of Asia. That will be an interesting sort of flow dynamic to watch, but that money that has gone to the US might actually come back into the region. So we'll just have to see. And India will play quite an important role in that. Go ahead.
Harold, hi, good morning. And it's always great speaking to you, hearing your views. But this morning, the other big headline is Reliance's numbers, right? A strong set of numbers, and just goes to show that not only are the traditional businesses like oil to chemicals doing well, but some of these new age businesses are growing at a very fast pace, like Telecom, for example. For a long-term Indian watcher like you, would this be a good time to be raising your allocation to names like Reliance?
I think in general, what this tells you is Reliance is not just one company. It's actually a sort of group of businesses all clubbed together, right? So they're doing quite well. And that's just an indication of where India is at the moment in this cycle. I think there's multiple growth drivers in India at the moment, and that is fairly unique. But there will be a point in time where we're going to look back on this and say, wow, that was a fantastic time for growth in India, but that might be a couple of years out. For the moment, this is really good. And we've seen this in other markets in the past. China had this in maybe 2006, 7, 8. It was a lot of growth drivers coming through that really made it a sort of a structural story at the time. And there was another period in China, I think maybe around 2012, 13, 14, where this was the case as well. So all markets have this at one point in time. And I think in India, that's the place. That's consumption, that's investment, that is autos, that's upgrading into the products. And I think what happens with Reliance is just a reflection of that to a certain extent. So, yeah, it just gives me even more confidence than I already had in that Indian growth story.
All right. Hi, Errol. Good morning. But, the question is, what about China in the near term? And as you've mentioned in your note, X of the problematic sectors, which could be commodities as well as property, well, earnings isn't too bad. It's mid-teens, actually, and high single digits if you include that as well. What's the toss-up now between China as well as India? And are you seeing some gem funds, a higher allocation towards the Chinese market? Tell us between the toss-up between these two. One is going through a structural story, but the other one could be a tactical play.
Yeah, so the Indian story is a structural story, and it's not so cheap. That is the story. And in China, the structural story is over. That was until 2018-19. There was a good structural story, and there's a real reset in that. And you can see that in the valuations as well. But it's very easy to be very negative on China. You say, oh, property's not going, and there's a lot of problems, they're having challenges, and that's all correct. But you take some of these sectors out, and you look at, for example, what the industrials and the consumption sector does, they're growing okay. It's about 15%, and that gives a little bit of confidence to the Chinese market. And that, I think that confidence, as that comes back, that money will flow into Chinese equities, and that could well be the story for this calendar year. The question then is, where does the money come from? And I think it might actually come from Japan, maybe more so than, for example, or North Asia than India. I think India will be somewhat separated from China, more so than it was in the past.
All right, Harold, we'll let you go on that note. Thanks a lot for joining in and giving us your views on several stocks, sectors, and the Indian markets. Let's take a quick break. So many stocks to talk about when we come back, so don't go anywhere.
Welcome back. You're tuned into Bazaar Morning Call. Our research team is standing by with the top list of stocks that we're looking at. And Sonia, you go first. Tell us about Reliance Industries.
So, we were talking about the numbers, right? A good set of numbers, stable numbers, better than what the street was estimating. And it's a strong earnings where across the board, you've seen the earnings performance was better than expected. So all their key operating segments, whether it's oil to chemicals, whether it's telecom, retail, the performance was good and they've built on to what they've done last quarter. The consolidated margins came in at 18% and the oil to chemicals business, which is its traditional business, was very, very strong this time. The margins came in at a 5-quarter high. The retail business EBITDA also went up about 18%. But I think the street will focus more on the strength in the telecom business. So if you look at it, the average revenue per user has been growing every quarter. And this time around as well, 1.5%, 1.6% year-on-year growth in the ARPUs is what we've seen. The subscriber addition was very healthy. Almost 11 million subscribers is what they added in one quarter. And now that takes the tally to 42 million subscribers in FY24. And if you look at the overall earnings as well, it's a double-digit growth on the top line, EBITDA, the margins are steady. The net profits, though, were down about 1.8%. The street also likes the fact that Reliance is, the capex is now behind the company. So they are reducing the debt on the balance sheet as well. And the debt has gone down to 1.16 lakh crores. Most brokerages that I've seen have raised their estimates on the stock. Jefferies has raised their target to 3,380. Elara has upgraded and raised the target to 3,479. And Nuvama has raised their FY26 EBITDA by 8% and target by 10% to 3,500. But standard disclaimer, Reliance Industries is the owner of the channel that you're watching. But we were talking about how the telecom space is seeing so much traction. The Vodafone Idea FPO yesterday just kicked it out of the park. Reema's here to give us the latest on that front. Reema, over to you.
Thanks so much for that. So, this was a massive FPO, 18,000 crore rupees, the largest ever FPO secondary fundraise done by any company. And on the last day, we saw some very strong subscriptions. So the overall subscription stood at nearly 7 times. Retail, was 1 time. QIB was 19 times, while H&I was close to about 4.5 times. In fact, as the subscription started picking up, the stock also saw a pretty smart intraday recovery. The low yesterday was 12.1. It went up to levels of 12.9 versus the FPO price of 10 to 11 rupees. So very strong subscription, and the stock too saw that intraday recovery.
Okay, all right, Reema. Thanks a lot for that. Well, let's hop across to Mangalam. He joining in to tell us about Nestle. Some negative news flow out there. Mangalam?
Well, negative news flow indeed, Nigel. The stock has been in focus ever since public eyes reports that came in that spoke about the presence of sugar in their baby food. And now we understand from sources to CNBC-TV18 that the FSSAI, which is the food regulator of India, has initiated action against Nestle for possible violations of high sugar content in their baby food, which is Cerelac. It accounts for about 15 to 20% of sales, depending on, some of the estimates that the company has posted as well. But the FSSAI scientific committee will examine this matter, the report of which will be likely in a month, and they will then take the action based on this scientific committee's report. So until there is clarity on that, we may see some nervousness. On its part, the company has said that they adhere to all the standards that the regulators have pointed out. But this is something that may cause a fair amount of nervousness. And it's not just Nestle that the FSSAI is looking at. They're also looking at other baby products and infant formula products to check whether they're being sold as per FSSAI standards. So any sort of regulatory action for a product as sensitive as this will bring some nervousness to the stock.
All right, Mangalam, thanks very much for that. Coming back to you for more, but Mahindra and Mahindra Finance here as well, there is some negative news flow. Abhishek is here to explain. Abhishek, morning.
Morning, Prashant. So, Mahindra Finance has given a press release in which they say that they'll defer the board meet, which was scheduled to be held today for their Q4 FY24 results to a later date. Now, there was a fraud which was detected at one of the branches in Northeast, and this is with respect to the retail vehicle loans that they have given out. Now, fraud involves forgery of KYC documents leading to embezzlement of companies' fraud. So, the estimated financial impact as per them will not exceed rupees 150 crore. Now, this 150 crore, as per Q4 FY24 PAT estimate of analysts, forms about 21%. And spoke to few analysts, they say that average ticket size is about 3 to 4 lakhs. So anywhere between 3,500 to 5,000 accounts would have got impacted due to this. So necessary corrective actions have been identified and few persons have been arrested, is what the company has mentioned in their press release. And this could be the stock of the day with respect to downward trend. Back to you.
Okay, thanks a lot for that. Well, Mangalam is joining in. He's going to talk about Hatsun Agro and why you should be watching that one. Mangalam, over to you.
Well, good results coming in from Hatsun Agro this time around. You know, dairy companies have been on an upward trend when it comes to the margins, and this time around as well, the reduction in these prices it reflects in their EBITDA. The net profit also doubled year on year on account of margin expansion. So revenue growth of 14.4%, gross margins jumping to 30.7% from 26.8%, and as a result of which the EBITDA was up 47%, and the net profit from about 25 crores has gone all the way up to 52 crores itself. What the company has said is that the value-added products of the company have done well, and gross margins are at a multi-quarter high at 30.7%. And it's not just Hatsun Agro that will be looking out for today, because dairy companies usually move in tandem. So watch out for some of the other dairy stocks as well, which may gain on Hatsun Agro's results.
Okay, Mangalam, thanks a lot for that. Well, let's go back to Rima. Rima, Tejas Networks, the stock was up and about in yesterday's trading session, and the numbers look quite good.
Oh, absolutely. If you remember in the last 1 hour, we spoke about how Tejas Networks had shot up 16% ahead of numbers and very strong numbers. Revenue growth 137% up quarter on quarter, 340% up on a year-on-year basis. The company has reported a profit after 5 consecutive quarters of losses. The EBITDA this quarter stands at more than 300 crore, while at the bottom line, the company has reported a profit number of close to about 146 crore. Back to you.
Okay, thanks a lot for that. So that's Tejas Networks. But some of these smaller numbers as well, Patel Engineering, PSP projects came through. Abhishek is going to give us the lowdown. Abhishek, over to you.
Well, to begin with, there are fundraisers which are happening. So QIP have been launched. Patel Engineering would be raising about 400 crores with a 9% equity dilution. The indicative price is about 56.5 per share, which is around 10% discount to yesterday's closing price. Lock-in period is 90 days, and the BRLM to this issue is Motilal Oswal. With respect to PSP projects, another QIP has been launched. The size is about 244 crores. The indicative issue price is 670 per share. Not much of a discount. It's only a discount of 2.8% to yesterday's closing price and about 1.8% to SEBI floor price. So dilution is about 10.1% of the equity. Lockup is about 90 days from the date of allotment. BRLM is SBI Capital as well as Ernst & Young. Back to you.
Abhishek, thanks very much for that. More stocks in focus: Mahindra Logistics, RR Kabel, and a few others. Vamakshi's got this list. Vamakshi, morning.
Well, good morning, Prashant. Let me first start off with Mahindra Logistics. A weak set of numbers is what the company has reported this time around. Revenue was up nearly 14%, coming in at 1,450 odd crores, but the operational performance of the company was quite weak. EBITDA fell by almost 11% to 57 odd crores. Margins have compressed by over 100 basis points to 3.9%, and the company this time around reported a net loss of 12 crores versus a profit of almost 1 crores in the same quarter last year. So weak set of numbers. Expect the stock to stay under pressure today. Apart from that, keep an eye out on RR Kabel as well. They have terminated the employment of Dinesh Agarwal, who is the CEO of the company, with immediate effect. The roles and responsibilities of the CEO will be taken over by Sri Gopal Kabra, who's the current MD of the company. So on the back of this news flow, expect the stock to be under pressure today.
All right, thanks a lot for that. Here's a quick recap of our top stocks. Stocks with positive news flow. There's Reliance, Vodafone Idea, Hatsun Agro, Tejas Networks, Patel Engineering and PSP Projects. While stocks with negative news flow, there's Nestle, M&M Financial, Mahindra Logistics and RR Kabel. But the other thing that the street is tracking very closely is the way crude prices are moving, and Brent crude is back below $88 a barrel. Manisha Gupta is here to give us all the commodity market action overnight. Manisha, good morning.
Morning, Sonia. Thank you for that. Well, yes, the crude oil prices are now trading at a 4-week lows, and the previous week saw a 3% decline, and in this week itself now, in the last 24 hours, we've seen another percentage point being given away. Well, it has to do with the strength in dollar index, the yields on the higher side, the fact that the U.S. production is at record highs, and the U.S. crude inventories are surging. And then there is easing of concerns within the Middle East as well, and that premium seems to be getting off the prices as well. And it's not just crude. If you look at the precious metal prices, the cuts have been deeper there. Silver prices fell 5% overnight. Gold was down 2.5%. There is some profit taking seen come in the base metal prices also. So the strength in US dollar and the fact that the US Fed rate cuts could be postponed by another quarter is weighing across the tangible commodities.
Okay, all right, Manisha, thanks very much for that. That's commodities in focus. We'll take a quick commercial break here. But on the other side, Devin Choksi will be with us, Managing Director at DR Choksi FinServ. And we talk specific stocks, lots of earnings and how stocks will react and what you should be doing. A little later after that, we put the focus on Reliance's fourth quarter earnings with an analyst. We'll be joined by Prabal Sen of ICICI Securities and Karan Thurani of Elara Capital. Stay tuned, that conversation follows.
Welcome back. Hope you're having a good morning. Yesterday was a good close to trade, and today we'd like to start off well in the green as well. But plenty of stocks to discuss, and help us out with that, we have Devin Choksi, Managing Director at DR Choksi FinServ, who joins us on the show. Hi, Devin. Good morning and good to see you. Well, Reliance Industries, technically the stock as well has been taking support at lower levels, and these numbers look more good than bad. What's your view at around this 2950 odd?
Yeah, Nigel. Good morning. Well, on one side, I think we have got the consumer-facing business in form of retail as well as Geo platform, which is cumulatively put together out of 178,000 crore worth of EBITDA. Both of these business put together are contributing around 78,000 crore worth of EBITDA. So almost, I think, another 1 lakh crore is left to the industrial businesses in form of oil and gas, refining, specialty chemicals, or whatever. So I think this company is basically systematically moving in this direction. That is the first key takeaway as I see. More importantly, in the Geo platform business, what I have seen, there is a huge jump in the data consumption, which they have reported. About 148 billion GB of data has been consumed as against 113 billion GB of data in the last year. Now, with this particular higher amount of consumption, this consumption is going to grow further. And with slight improvement in the pricing, probably I think the numbers could spell significantly large amount of improvement for the business as a whole. So that is one catalyst, I think, which I believe is going to play or react, I think, very strongly going forward. And similar situation we are observing in case of retail, wherein I think most of the unique metrics are showing the growth of around 25%, 20 to 25%, including the number of transactions, which is again suggesting that I think the higher amount of consumption-led growth continuing. And most importantly, the EBITDA margin, which is probably the best in the world as I see it, which is at around 8.5% compared to what it was last year, around 7.3, 7.4%. So overall, I think the business situation demands, I think, a good amount of look once again from the consumer segment point of view. In my viewpoint, I think the business is likely to grow steady. Maybe oil to chemical business in this current quarter and thereafter is expected to show, I think, a stronger performance given the fact that the China-related problems have subsided to a greater extent. So one looks positively to this particular stock going forward with around 15 to 20% kind of an upside in the stock price.
Got it. Devin, hi, morning. Talk to us about if you saw the news flow around Mahindra and Mahindra Financial. The fraud which has been detected. What's the road for the stock from here? And if you want to weigh in on Nestle as well, that's the other stock which has got news flow with regards to FSSAI starting a probe, starting to look into the matter.
So, yeah, Prashant, good morning. In a way, both these companies are having a negative cash flows to talk about, negative news flows to talk about. And that is where probably I think one will have to be a little bit more gradual in understanding the subject. Of course, corrective actions have been taken by Mahindra and Mahindra Financials. That is a good part. My own take is that I think there is a serious challenge in the industry as a whole. You don't get enough amount of skilled talent. At the same time, I think the values are compromised because most of the times I think the business pressure is so huge that the managers in turn I think end up taking shortcuts. And that's where probably I think one is finding such kind of situation coming up on the surface. This is going to be a challenge going forward as well, not for one company, but I think for many companies. So that's where probably I believe that the stronger companies would relatively beat this challenge better because of A, their ability to meet the compliance related pressure is far better. B, I think they're kind of attracting the right kind of talent and pricing them or providing, I think, the kind of a roadmap to the talent for the long-term tenure in the company is also far better for those larger companies. So I believe that I think one will have to select relatively stronger companies in the portfolio given the kind of challenge that we are facing, particularly in this kind of finance business, service business, banking business, as we may want to call it as. On Nestle side, yes, I think this company has been, I think, passing through the negative news flows time and again. In past also, they have been subject to this particular situation, this time around with a different product. I believe that I think they would probably take the corrective course and things start picking up. Maybe the stock is giving the corrective advantage to I think those investors who want to buy at lower price in price correction. That may be I think a good opportunity to consider if the market gives good price correction from the current levels.
Okay, the other thing, I mean, since we were also talking about Reliance, and I'll get to that later. The entire telecom space is doing so well, right? Bharti Airtel is at a 52-week high. You have Indus Towers, which is doing well. There's the Vodafone FPO, which has got super subscription. From this entire space, what's your best bet now?
Yes, Sonia, good morning. Well, I guess I think the most important aspect is that in this particular period, having got the subscriber, having got the higher amount of data usage because of the rollout of 5G by Bharti and Jio, I believe that I think they are at the best advantageous position today. And as I was making a point, the amount of data consumption that Jio has reported, I believe I think that is only going to be a starter because 148 billion GB of data consumption is basically something which is suggesting that the growth in the data consumption is going to be sustainably higher going forward as well. And in that kind of a situation, with the slight improvement in the pricing, it could possibly generate significantly large amount of revenue and the profit for the company. I would like to believe that I think in the current year, we are likely to see an improvement in the pricing with the new applications coming in, which are suggesting that higher amount of data consumption would be a reality even for those applications. So given that fact, I believe that I think both Bharti and Jio, both of them are positioned advantageously. As far as Vodafone Idea is concerned, I think they are trying to recover the lost ground in a systematic manner. Maybe at this point of time, the funding which was up till now not available is now made available. So to a certain extent, I think they are going to beat the problem of losing the customer. But let's see how exactly I think they invest money into the 5G network rollout and see how exactly the business can come up on that front. But I think more sure about Bharti and Jio at this point of time.
All right, well, let's talk a little more about Reliance's numbers. All the business segments clocked in strong growth. The revenues went up 11%, EBITDA rose 14%. We have Prabal Sen, who's the energy analyst at ICICI Securities, and Karan Taurani, the media analyst and senior VP, research analyst, media, consumer, discretionary and internet at Elara Capital. Gentlemen, morning to both of you. Prabal, let me start with you. The oil to chemicals business was very strong. Margins were at a 5-month high. But do you oppose these numbers? Would you raise your estimates, earnings estimates on the stock, on the company, and your price target as well? Just take us through the rationale.
I think the OTC segment needs to be looked at a little bit in context of what has happened over the last second half of the year, where the extent of crude advantage that companies like Reliance and even indeed the OMCs managed to get, partly from higher volumes coming through from Russia, but also, as the company mentioned in its presentation, it optimized the offtake of appropriate Latin crudes, which actually helped deliver some of the refining advantage that has come through in the OTC numbers. There has been some marginal improvement, at least on a sequential basis, in key petrochemical spreads as well. But if we look at what is happening in terms of FY25, the start of the year has actually seen a little bit of a depression in terms of refining margins, particularly in terms of the Singapore benchmarks. And on the petrochemical front, the demand supply situation continues to remain fairly bearish. So from a growth perspective, I'm afraid I would still look at low single digit growth going forward from the OTC segment overall, because slightly better refining, even if there is some improvement that comes through, can be offset probably by flattish petrochemical. There could be some improvement in terms of petrochemical margins if there is some sort of supply optimization that happens in response to slightly weaker demand. But at this point of time, we would be probably cautious of building an extremely high growth from this higher base, which in itself is fairly significant.
Okay.
Okay, all right. Got that, Prabal. Coming back to you, Karan, let's get you in the discussion as well. The retail part of the business was a little bit softish, but there was some easing out in terms of the net debt. What are you factoring in on the retail part?
So I think if you look at the retail business, I think the growth has been slightly, muted, but we've come up from a festive quarter. So I think in terms of the annualized growth, if you look at the numbers are good at about 18-20%. If you look at Reliance as a play, I think it's an omni-channel play. So you have got a very strong addition in terms of physical stores as well, and plus sizable online presence. 2-3 trends, I think, which are going to emerge strong, for the retail business. One is, the offtake of private labels. There are 3-4 brands, which have crossed a turnover of 2,000 crores on the private label side. Now, that is a very compelling sign because the market is getting displaced by larger incumbents, on the retail side. So that's one. And secondly, very strong growth in the luxury segment. So the premium segment growing by 20%, luxury segment growing by 40% plus. I think these are very strong signs. And third, of course, is, the e-commerce play and the omni-channel play. So if you look at most of these companies today, the quick commerce companies, the e-commerce companies, they are growing at a faster clip versus traditional retail. So I think these three drivers are going to fill up, the momentum for the retail business going ahead.
And what is your target price on the stock now, Karan? And have you raised your earnings estimates for, of course, the retail business you said has been slightly muted this time. But going forward for FY25, what would the estimates be on the retail business and what's the target price?
So our overall target price as a house is about 3,500. In terms of specifically retail, not much change as far as estimates are concerned. I think the growth rates will be in the range of 15 to 17% with a steady improvement in margin, basis the levers that we pointed out.
Okay. And Prabal, same question to you. For FY25, the oil to chemicals business, what is the performance looking like and what kind of EBITDA growth are you expecting to see?
So we are looking at actually a flattish EBITDA at around 62 to 63,000 crore for FY25, with a little bit of growth back to about 64 to 65,000 crore for FY26. And our target price for the stock right now is 28.10 with a rating of hold.
And this potential production upside of 15% from KG-D6 in the medium term, has that come as a positive surprise to you? What was your own expectation?
Yes, I think once the approval comes through and the developments actually play out, this actually sets pace for growth even beyond the current plateau of around 30 to 32 that the company had been guiding for the next couple of years. So as and when the execution happens, definitely I think this sort of adds a small leg of growth. But it's obviously the approval has come through now. As you know, all of these fields are fairly complex fields to bring on stream. So probably around 2-3 years down the line, this additional production will come through. Definitely makes a difference in terms of the DCF prospects of the upstream asset. So it is definitely a positive surprise.
Okay, so it's a positive surprise there. Karan, coming back to the retail business, right? I take your point that maybe the top line growth was modest at 10%, considering there's so much competition in this space right now. But two things which stood out to me as positive in the retail business. One is that they're taking a lot of hard decisions to cut costs, right? So whether it is bringing down their warehouse costs or even they've sold some of their warehouse assets, they saw high level of store closures as well. So that perhaps will help them on the operational front. And the other one is their balance sheet has improved. So their net debt levels have come off, partially because of the capital raising that they did in FY24. But these two factors, would you consider them big positives, and would that give any incremental upside to the retail business?
Yes, going forward, potentially there could be an upside. But if you look at the business as such in terms of profitability, the online business, is kind of making losses for most of the new businesses that they've started. If even Tira is something which they've started new, but they haven't, scaled up aggressively on Tira as well. So I think definitely from here on, there is traction, to improve. And many of the e-commerce companies are kind of, trying to invest in supply chain, reduce their fulfillment costs. And that is somewhere a margin lever, whether it could be, in charging convenience fee or platform fee, from the customer. So better profitability in the digital side, will augur well for them. And second, of course, better growth, coupled with profitability, which is of utmost important. And as far as store addition is concerned, I think it does make sense. I think on a steady state, on this kind of a base, they will be adding not more than 3-4% of store addition is concerned on this large base and this large categories that they have. So I think you will find some quarters, wherein the performance will be slightly muted, but basis festive, basis overall annualized basis, I think there is good traction to grow at 15 to 18%, given the kind of widespread that they have across categories and the omnichannel approach that they have on offline and online.
Got it. Final question to you, Prabal. We were talking about the improvement in the balance sheet, right? The reported net debt now is $14 billion, which has declined by about 8% year on year. And now that the peak capex of the company is over, do you think that they can strengthen their balance sheet further? And will that be an incremental positive for the stock going forward?
If the capex intensity actually comes down, absolutely, for sure. I think that's the one thing that will remain a key monitorable. We have seen in the past couple of years is that when one round of capex is actually completed in one segment, there's always been one more new segment, and that's the way that the company's DNA is wired. They're always looking for the next big thing and the next big project. So one will have to really look at whether the capex intensity actually comes down to levels of somewhere around maybe a 1 lakh crore a year, which is, I think, something which would still be about 20% lower than what they've done this year. If that happens with the kind of cash flow improvement that continues to happen and the steady 10 to 11% profitability growth that we are building in, for sure, I think the net debt or leverage should come down. The company has mentioned, however, that they are comfortable with the net debt to equity or leverage being less than 1, which it is right now. So I'm not too sure they would want to deleverage too much, given that their cost of borrowings are extremely competitive when you compare to any peer on the street or even the sovereign for that matter. But the return ratio improvement, which is something that has lagged earnings growth for a while now, I think if that starts to come through, that will be a big positive trigger for the company.
Okay, all right, gentlemen, thanks a lot for joining in and filling us in with your take. Wishing you all a good day ahead as well. So that's about Reliance Industries. Well, I think we can get back to a chat with Deven Chowksi. Deven, you've already given us your view on a couple of stocks, including Reliance Industries, but I want to ask you about Persistent System. Yesterday the stock knocked back closer around 10%. Quite a few brokerages, though, are still positive on the company. No worries in the results. The problem was that margin outlook was pulled back a little bit. They were guiding for margins to improve in FY25, and now they're guiding for flattish margins. And also on a valuation pattern, though they corrected 10% yesterday, it trades at 33 times. What's your take on it? 10% lower yesterday.
Yeah, Nigel, I guess I think this is going to be a reality check now for most of the companies. The companies are trading at a premium valuation largely because of the fact that I think they are producing growth. Moment I think we are short of growth, I think the market will not stay with the company, and probably I think that's what I think you have seen in likes of Persistent, even for that matter, some other companies also. I think the similar situation has happened. In my viewpoint, I think the IT, mid-tier IT companies, unless you are, I think, specialized, I think, in some of the areas like niche areas like engineering and R&D space, probably, I think it's difficult to value the company based on a conventional business model. And that's where I think many of them are facing the challenge at this point of time. So it's safer to stay with the likes of LTTS, LTIM, Scient, LKPIT kind of companies, or even for that matter, Tata Elxsi. Those kind of companies have a niche model in play, and that is where probably we believe that I think they have relatively higher amount of growth on a sustainable basis to talk about compared to others. So that's where you have to make a differentiation maybe in the portfolio. Have those companies where you get the more clarity, and thereafter I think the performance.
All right, Deven, thanks for that. Stay with us though, but we'll come back to you in just a bit. Anuj is here with what he's making of the trade setup this morning. Anuj, good bounce on Friday, continuation yesterday, and very good retracement of the 1,000-point fall.
Oh, absolutely, Prashant. Good morning. And, the market showing signs once again that if you buy on global weakness and especially geopolitical worries, which is what we spoke about right last week, that this perhaps would be one last good buying opportunity for you before the rally that takes market to all-time high. And the rally may have started, good numbers from Reliance, overall good cues. So things looking up. Let me straight away get to the market levels now today. On the Nifty, the numbers I'm watching out for, Most important, we reclaim the 20-day mark, the 20-day exponential moving average, and closed above that. So that's your first support, 22,296 to 22,310, which is where 10 and 20-day exponential moving average are placed. And then the bigger support is 22,132, which is the 50-day exponential moving average. The resistance on the upside first comes in at 22,450 to 22,500, the option zone, and then the all-time high of 22,775. On the Bank Nifty, what was very interesting was that Bank Nifty closed almost at day's high, despite HDFC Bank closing at day's low. Tells you the strength of the market. SBI and ICICI Bank showing signs of leadership. The support here, again, at the 10 and 20-day exponential moving average. Charts are similar for Nifty and Bank Nifty, 47,688 to 47,776. And the 50-day exponential moving average is placed at 47,300. On the upside, the resistance comes in at 48,219, going by the option zone. Remember, it's the monthly expiry tomorrow, excuse me, on the Bank Nifty. And then 48,500 going by the charts. But it's better to play Bank Nifty via individual stocks, specifically perhaps via PSUs, because they are clearly outperforming. I'll leave you with the quote of the day, and this one is interesting. If people are doubting how far you can go so far that you can't hear them anymore.
Okay, that's a good one. That's very helpful, especially on some of the tough days, right? When you doubt yourself mostly. Thanks a lot, Anuj, for that. Well, as always, Anuj sharing tips on how to approach the markets and, of course, how to approach your life as well. Let's take a quick break. On the other side of the break, Mitesh Thakkar and Sudarshan Sukhani will join in for a quick technical check of the market.
Okay, welcome back. So the markets are going to start in about, 8 minutes or so. It's going to be quieter, and that is absolutely exactly what we need. A quieter kind of start, and maybe slowly we continue to claw back up. Mitesh is with us, and so is Sudarshan with what they want you to do in terms of specific trading action. Gentlemen, good morning. Good to have you guys here. Mitesh, to start with you, it's a dash for all-time high. We're already at the 61.8% of the fall. Or run into some resistance here? What's your sense?
Prashant, I think, the level which will approach today with the 50 odd point kind of a gap of which the GIFT Nifty is indicating would be important. I think 22,400, 450 is also the gap area, also is the replacement area. And therefore, I think, showing strength after the gap up is more important. In case we don't, then we are confined to the range, which is not a bad thing, but I think then you'll be chopping and, be more of sideways. My initial belief is that you might see a lot of supply around 22,450, 500, and therefore, if you're carrying longs from yesterday, the first idea would be to, as we approach those levels, if it happens today, then I think to take some profits of the long positions. A sustained hourly close about 22,500 would give me some confidence to re-enter into long position. Otherwise, we'll wait and watch for that intraday dip.
All right, Sudarshan Sukhani is also joining in. Sudarshan, how are you feeling about the market now? It's been steady state. Do you think we can build on to our gains, and what are the stocks you're looking at?
Yeah, good morning. See, the markets are in a short-term uptrend. That is a bounce back from the previous lows that we saw last week. I think the markets will consolidate. I'm very suspect of rallies that are V-shaped. I told that yesterday also. The best scenario for the market is to move sideways and consolidate, and then perhaps begin a new uptrend, hopefully. So as of now, intraday trades should be taken on the long side, but I would not bet on a positional long, not now. You have to wait for a base building process to begin and then complete. So that's the trade. Buy Nifty, buy Bank Nifty for the intraday trade, buy on dips, but there's no need to carry positions. Now the stocks are also on the long side because their intraday sense is for buying. Bajaj Finance is a buy with a stop under 69.30. NTPC is my only intraday short with a stop above 367. Power Grid again is a buy with a stop under 267. And finally, Tata Consumers, which after a brief correction is putting its acts together, is a buy with a stop under 1100.
Okay, got that, Sudarshan. Thanks a lot for that. By the way, Bandhan Bank, there's more than a crore shares worth around 219 crores that have been changed in pre-open. So we'll keep an eye out on that as well. Mitesh, morning. What about you? What are the stocks you're tracking?
Morning, Nigel. I have all buy calls, given the fact that a lot of stocks gave reversal patterns on the intraday charts. So a buy on Havells with a stop at 1535. Here I would look for targets of 1590. LIC Housing Finance just bringing into a fresh high. So buy here with a stop at 650 for targets of 690. Similar setup happening on the charts of Canara Bank, which is a buy. Keep a stop below 590 for targets of 620. And MFSL has also got a good positive pattern. So buy here with a stop at 1040 for targets of 11.
All right. We'll take a break on that note. When we come back, we'll have the pre-opening rates, and later we will connect with Ram Praveen Swaminathan, the MD and CEO at Mahindra Logistics, to discuss the company's Q4 performance. Stay tuned. Welcome back to Bazaar Morning Call. Well, Sneha Seth, derivatives research analyst at Angel One, is joining us now. Sneha, this market has been very strong, but what are the stocks that you're looking at today, and what do you see as the floor and ceiling for the Nifty now?
Individual counters, if we see, like two counters. First of all, the first counter is LIC Housing Finance. If we see, this counter has shown some strength and has been consolidating. It has a resistance around 670 or so, but I think looking at the decent build-up, I believe we may see an up move. So I would recommend buying this counter with a strict stop loss of 644, and the target expected will be around 690. Apart from this, Apollo Hospital is a buy for me with a strict stop loss of 6,150, and the target expected will be around 6,400.
Okay, all right. Thanks. Thanks very much, Sneha, for that. We're just going to start open in a couple of minutes from now, and the pre-open, that is. And this is going to be an interesting session because with the open, as Mitesh also was pointing out, with the 50-odd point higher start that we'll get, approximately, you'll basically run into the resistances around the 22,500, 22,400 to 22,500. There is a gap area, and that's potentially the resistance as well. So, can we surpass that, or is the market going to take a bit of a pause? Other questions. Lots of stocks from yesterday, right? Sterling Wilson, SW Solar, for example, 10% higher, and that's on the back of numbers. Of course, there is for the quarter, the company turned a profit. Stock started lower, by the way. Initially, it was down about 3% or so at one point, and then ended about 10% higher. A name like there you go on your screen. A name like Viatech Vabag ended at a new all-time high, into the 4 digits, took out the high from 2015. So these are all names where there is so much momentum. Tejas Networks, I reckon, will join the list of some of these names, although Tejas Networks also participated in the upside in a pretty significant way. So I think these are all names which are reacting to earnings, very strong earnings, and will do that over the next couple of days as well. But even otherwise, apart from earnings, there is other news flow to react to. There is, of course, Mahindra and Mahindra Financial Services and a few others. Reliance, of course, the big one this morning as well. I think just sort of hitting the market open with about a minute to go, the pre-open, that is, with about a minute to go.
Absolutely. Mahindra Logistics is the first management that we have on our show today. The company reported a weak set of Q4 numbers. The margins have contracted, supply chain EBIT losses have expanded. We have Ram Praveen Swaminathan, who's the Managing Director and Chief Executive Officer at Mahindra Logistics. Mr. Swaminathan, good morning and thanks for joining us. Can you tell us a little bit about why there was operational weakness in Q4, what went wrong, and do you have any kind of targets for FY25, both in terms of the operational side as well as on revenues? How do you see things shape up?
I think Q4 is actually a robust quarter in terms of revenue growth. I think we came back year on year with around 14% growth. after slight weakness in the earlier part of the year. I think actually from an earnings perspective, excluding exceptional items, earnings were actually positive. Our core business was impacted by some non-recurring one-time charges around discontinued business accounts and one-time IT transition costs. Those added up to around 12 crores. Set that off, and I think our core business, which is our 3PL contract logistics business, was actually was in pretty stable shape, and sequentially, actually, gross margins were pretty flat. We also showed a pretty strong improvement in the Rivigo business or the express business, which has been the larger, which will be impacting our profits across the business, and that actually showed a very strong quarter-on-quarter improvement. Losses declined by around 30%, and we are on target to make that business EBITDA break even by the first half. So I think it's a mixed set of numbers, Sonia, and I think when you balance them out, some actual tailwinds as we go into this year.
So, okay, if you say that, it's going to adjust itself as we go into the year, you had a 10,000 crore revenue target by FY26. Are you on track to do that? And what do you think the revenues could be by the end of FY25?
I think obviously hard to put a perfect number on this, but we are actually pretty confident about getting to that 10,000 crores in that window of time from a revenue perspective. Obviously, macros do impact us quite a bit, but we feel pretty confident about that. I think this year we do hope to see robust growth. The mobility business has been growing at 10 to 11%. We've kind of turned it around. We hope to maintain that. And the supply chain business has some real strong tailwinds going into the year. So I expect something closer to a historical growth, which has been in the double digits.
All right. Hi, good morning, Mr. Swaminathan, and good to see you. When you mentioned that Rivigo will turn around, and in fact, the first half of the year, that'll turn profitable. So that'll be a small swing factor that plays out. What about margins? How do you see margins pan out for the coming year? And also, I believe that you have an ROE target of 18% by FY26. Tell us more.
So, obviously, we are confident. Obviously, we feel pretty good about hitting that 18% plus ROE targets by F26. So that's not something which we really feel is under stress. Obviously, the big carry in our business has been the MESPL acquisition, as we have been investing in building that network, and on a consolidated full year basis, we had nearly 125 crores of losses in that business. Set that off, the business actually had underlying earnings growth in the rest of the segments. So the MESPL Rivigo business investment is the large carry. We hope and we are confident we will get into break even on EBITDA by the first half. As I said, Q4 was a very strong improvement. Plan to sustain that and reach an EBITDA break-even, and that will obviously be a big swing factor on consolidated earnings for the company. The rest of business, I think we expect margins to be flat or show some positive velocity, at least through the first half of this year.
Okay, so 10,000 crore revenue, 18% ROE, those targets for FY26 are intact, as you are telling us. Within supply chain, which is the segment which you're most bullish on? If you can, over the next couple of years, and where is there a little bit of sluggishness?
I think from an end markets perspective, obviously, we are seeing some sluggishness in farm and ag, and I think where we see the most optimism, obviously, is around auto, and I think e-commerce is coming back. We had a weak first half in e-com, but we've had a rebound both in terms of order intake and in terms of reported revenue as well. So order intake has been very strong over the last couple of quarters, really coming from consumer, customer, FMCG, e-commerce, and auto. And I expect that to trend line through the rest of this year as well in terms of order intake for us.
Do you think e-com is kind of bottomed out? Because I think 23 was kind of slow if you look at the full year as compared to the previous year. Do you think it's bottomed?
Yeah, I think 23-24 has been a difficult year, especially the first half. We saw a lot of churn in capacity and impacted us, obviously, as an outsourcing partner for our clients. But we think it's bottomed out for the large part, and we've actually seen some strong growth coming up in specific categories, like small pack, some categories of products on small pack, like grocery, hyperlocal. We are seeing some strong growth there, and that's actually been carrying our velocity as we ended the year.
Okay. All right, Mr. Swaminathan, we'll leave it at that. Thanks a lot for joining in and speaking to CNBC TV18 about the numbers and the way forward. That's Mahindra Logistics. By the way, we have the pre-opening rates that are kicking in right now. So it would be interesting to see a couple of stocks. Reliance Industries, of course, will be top of mind to see how the street is reacting to those numbers. Remember, there was some muted performance in the retail business, but ex of that, most of the other businesses did quite well, better than street expectations. The stock is absolutely flat. And Wipro is the other one, up almost about 2% right now. Keep an eye out on that. M&M Finance, remember, the company has delayed its earnings board meeting after there was a 150 crore fraud at a Northeast branch. So that stock is down almost about 10% in pre-opening. Not looking good for M&M Finance, but it's generally had a very volatile past. So reacts very adversely to any kind of news flow. And another, stock to look at is Vodafone Idea. That FPO got a total demand of over 1.25 lakh crores. So that one is looking pretty good. By the way, Tejas Networks reported a robust Q4. I think there's a double-digit move on Tejas Networks this morning, in pre-opening at least. So we'll just spot that stock for you as well. Look at that, 15% higher. But Sudarshan is back with us. Sudarshan, what's the big call at 9:10?
Well, sorry. Tata Consumer is a buy with a stop under 1100.
And Mitesh, what about you?
I'll go with a buy on Havells for targets of 1590.
Okay, all right. Mitesh, I wanted to ask you about HDFC Bank. That one went into its numbers expecting some bit of a positive surprise. There were, parts of those numbers that look good, but it's not able to drive the stock much higher from here. What are the levels you're looking at this big name? Because it's still the largest constituent on the Nifty.
See, HDFC Bank, the stock was already in an underperformance mode, and then we saw some kind of bottoming around the levels of 1400 and below it. It's given a bounce back from there, but it's not turned the medium-term trend on the upside. Also, it's kind of, failing to close about its 200 average, which is at about 1550. And yesterday we got an intraday high of 1557, and then we came down from that. So first 1550, if we get a closing above that, maybe 1600, 1620 can happen, but it is not showing signs of a very sustained long trend.
Mitesh, any thoughts on Tejas? Do you have a call or do you have positions here, Tejas Network?
No, I don't have positions, but yesterday was a big breakout day. Obviously, I think, there are some marquee investors over here, so I've been keeping a track on this name. And I think getting past the highest ever closing which the stock has had, which is around 905, is a positive. My sense is that this is starting a new leg of an up move, which could see it get to about 1100 plus levels.
What about, I think we discussed Vabag yesterday, and that's had a phenomenal move. Sterling Wilson Solar was another one. It'd be interesting to see how it's opening in the pre-open because it was limit up. This one, SW Solar, Mitesh?
So again, I think this is a stock which has done very well, and it's in a long-term uptrend. Very good stock for me. I think it's a 800 rupee kind of a stock at least, and then you can even look at higher levels. So it's a buy for me.
What about rate gain, Mitesh? Again, it saw a 30% fall from the highs. Yesterday was a big day, about 7 or 8% higher. And it's not quite gotten to, if you join the highs, there's a downward sloping trend line. It's not crossed that, but it's getting near. Do you think it could see a reversal, a meaningful reversal?
Yeah, Prashant, it's also, it's after the correction, it's also hit the 200 average, and yesterday was a gap up reversal. So short-term positive. I would look at a trading rally to about 770, 780 levels.
Right, let's get into some stocks now. Reliance Industries will definitely be in focus post its numbers. Most brokerages are quite bullish on the stock, so let's get all the calls going. Jefferies has raised their target price to 3,380 on Reliance. Bernstein has an outperform with a target of 3,160. Morgan Stanley has an overweight. Elara has an accumulate. Elara has in fact upgraded to an accumulate from a buy and raised their target price to 3,479. Nuvama has raised their FY26 EBITDA by 8%, lifted their target price by 10%, and Centrum has revised their target price higher to 3,481. Now, a couple of things why the street is bullish. Geo's numbers were ahead of street estimates on the higher average revenue per user because of an improved subscriber mix. The oil to chemicals profitability rose because of a very robust refining business. In fact, coming back to Geo, the net subscriber additions were robust at 10.9 million and the focus is now on 5G monetization. Now, the retail business, the top line was a bit muted, but the margin performance is something that the street definitely liked. And then there is the balance sheet improvement. So the reported net debt is now at $14 billion, which is a fall of 8%, which is good. And most brokerages say that peak capex for the company is now over, which means that they can improve their balance sheet further. So we'll keep tracking the stock for you. But Persistent Systems is the one that had a volatile move yesterday. Reema's here to tell us what brokerages have made of it. Reema.
Thanks so much for that. So Persistent was down 10% on very large volumes. Delivery volumes were 5 times the 10-day average. I looked at a couple of brokerage notes, and JP Morgan believes the 10% stock price decline bakes in the negative FY25 margin expectation and provides an attractive entry point. HDFC Security also concurs. They have a buy call with a target price more than 4,000 rupees on the stock. They say that the valuation multiples of Persistent have re-rated over the past few years, and therefore this correction of 10% provides an attractive entry point. So buy the dip is the call by HDFC Securities. Kotak, though, believes that, even after the correction, the stock is still very expensive. So they've cut their EBIT margin expectations by 80 to 100 basis points. There is an EPS impact too, but they're saying that even after the 10% correction, the stock is at 33 times FY26 EPS, which means it's still expensive. Nomura believes the margin, they've cut their EPS estimates by 9 to 11% over the next 2 years because of, again, margins getting reset, and margin expansion aspiration has been pushed out due to continued macro weakness. So mixed opinion. JP Morgan and HDFC believe the correction is an attractive entry point for Persistent Systems, but Kotak believes that even now the stock is expensive. Back to you.
All right. Reema, thanks very much for that. The management will be joining us 10:30 this morning, so that's a conversation you don't want to miss. Lots of interest around this one on Persistent Systems, as Reema pointed out. So that's 10:30 this morning. Mahindra & Mahindra Finance is the other one which should be in focus, not in a good way. Abhishek is back with us with the spotlight on M&M Fin. Abhishek, over to you.
Mahindra Finance have deferred their board meet, which was scheduled for today with respect to the results to a later date. So fraud was detected at one of the company's branches in the northeast part of India with respect to retail vehicle loans. The fraud involves forgery of KYC documents. Now, the estimated financial impact is about 150 crore, which would have formed around 21% of Q4 FY24 estimate PAT of analyst estimates. This is also with respect to a few analysts that I spoke to. Average ticket size is about 3 to 4 lakh per ticket size. So anywhere between 3,500 to 5,000 accounts would have got impacted over here. Necessary corrective actions have been identified and few persons involved have been arrested is what the company has mentioned in the release. Brokerages have written note. Investec says the amount forms 15% of Q4 FY24 estimate PBT and about 6% of annual PBT. IIFL Securities says the quantum of fraud is about 3.7 times the disbursals per branch, and it seems large for a single branch and might have happened over a few years or over last few quarters as well. So growth can get impacted in the near term as management is now would be focusing on tightening their control as well as implementing remedial measures for the same. Back to you.
Okay, thanks a lot for that. So we have a couple of seconds before the markets open. And plenty of stocks apart from, what we just spoke about, right? Inox Wind is in focus. They will be considering a bonus issue by the end of this month. So Inox Wind, I think in pre-opening is rallying a bit. Just keep an eye out on that. And Hatsun Agro, the profits have doubled on the back of a margin expansion. So Hatsun Agro is the other one, which is looking pretty good this morning, up almost about 10%. Look at that. Kesoram Industries, though, there's margin compression over there. So there could be some pressure on that stock. So don't lose sight of that. And tomorrow you have two big numbers coming out. There's Axis Bank and HUL will be reporting their numbers. So both those stocks will be in focus today. Let's see. Last day to trade before the earnings tomorrow. Generally comes out during trading hours. So just keep an eye out on these two names. But other than that, it's been a pretty good, run for the market.
Well, that's right. I'll be looking at these mid-cap IT companies. Yesterday, they got smacked, post-Persistent Systems numbers. But for the time being, FKPIT, Birlasoft, Persistent Systems, all of them starting in the green. So let's see where they go from there.
Absolutely. And as we said, Persistent management at 10:30 this morning. The first trades are on your screen and is going to be a higher start. 22,410, 73,900 or so on the sensex. So that's the Nifty and the Sensex, the first rates which are coming up. It's all going to be about individual stocks and not large cap names, by the way, except Reliance maybe because of the earnings. But apart from that, lots of smaller names, right? Mid caps and small caps. Reliance is absolutely flat. Sensex is up 200 points. Nifty is up 80 points. So this is a very strong start once again this Tuesday morning that we are getting. And mid-cap index is up 0.5%. I think the small-cap index starts about 0.5% higher as well. Sonia is on the wall with more rates. Sonia.
Well, thanks a lot for that. So let's start with the big boy Reliance, right? So taking a look at the numbers now, the stock is up in the green, just a tad bit actually flat with a bit of a positive bias. Vodafone Idea, the FPO got a very strong demand of 1.25 lakh crores. So the stock is up almost 2.5% in trade right now. Bharti Airtel has been at a fresh 52-week high for the last couple of days, continues to inch higher. In fact, Indus Towers also, let's take a look at that one. The entire telecom piece has been very, very strong lately, and there continues to be traction over there, especially after, Reliance's numbers. So Indus Towers, look at that, 4% higher now on that particular name. M&M Finance, on the flip side, the company has delayed its earnings board meet after that 150 crore fraud at the Northeast branch. So M&M Finance down 6.5%. RR Kabel has terminated the employment of Dinesh Agarwal, who is the CEO, with immediate effect. So that stock is down almost about 2.5%. As I said, big earnings tomorrow. There's Axis Bank and HUL that will be reporting their numbers. Both those stocks in focus now, trading a tad bit in the green. You have Tejas Networks, which was a very robust Q4 for the company. So Tejas Networks up almost about 14% odd. Inox Wind will consider a bonus issue, so that one is up almost about 4% odd. And there is margin compression that we've seen for Kesoram Industries, so that stock is down almost about 0.7%. But it's all about specific stocks. Otherwise, it's pretty strong opening for the market. Look at that, now at 22,400. Back to you.
All right, Sonia, thanks a lot for that. Well, a few stocks that are flying away as we speak. You have Ester Industries. That stock is up closer on 6.5%. I'm not sure whether or not there's news flow, but volumes as well fairly high out there. Anup Engineering is up closer on 7.5%, so that's another stock that's coming on the radar. Inox Wind Energy, as Sonia mentioned, that's up closer around 5% odd. But volumes very, very tepid out there. Parag Milk, Mangalam told us that sometimes, when a milk company comes out, dairy-based company comes out with a good set of numbers, it has some rub-off. And Parag Milk, I think, was up closer on 2% initially, so that stock is still up closer on 2.5%. Sterling and Wilson, well, the stock is higher. I think the promoter entity, they have some debt restructuring that comes up towards the end of May. So that stock, in fact, as well will be on your radar. So that one's up closer around 6%. Besides that, GSPL, that one got clonked back yesterday. It's trying to pull back up closer around 2%. There have been some downgrades as well that have come in there. But that stock is now up closer around 3.5% as we speak. And NCC from the frontline names is up 2.5%. So a good start, Prashant. The benefit of having shorts in the system will be that if we can sustain at higher levels, those shorts are going to get squeezed out. And keep in mind, it's expiry week.
No, absolutely. And I think, we'll see because we are right into those levels now. 22,400, 22,500. It's been a sharp and, furious recovery from the lows over the last couple of days. And actually exactly 2 days, right? I mean, Friday, of course, from the lows, the market came up very nicely. And, can't complain this morning as well. Market breadth is 7:1 in favor of advances, although it's a little early in the day to really emphasize that point. What else? Tejas, of course, is going up 13%. Big volume. Number one volume-led gainer, by the way. Indus Tower is number 2 with a 4% pop, 363. We were discussing Sterling Wilson Solar in the morning, 6%, 656 there. That's looking good. Inox Wind, Sonia was mentioning, 6% in the green. There is TRIL, what else but another 5% circuit. 732 on transformers and rectifiers. Skipper is up about 2%. Hudson is up 7%. So, yeah, I mean, this is a lot of it, of course, is earnings related, but it's looking good overall. On the downside, M&M Finance has already been mentioned, and we've got Cochin Shipyard, which is down. I think Aster DM has got some corporate action it's showing a big cut. Will come up on your screen. Indigo is down 0.5%. IIFL is back at $400, so down about 2%. The low, of course, was a little over 350 rupees. Rallis India, Sangvi Movers are some of the others which are down between 3 and 4.25% at this point in time. So that's a start that you have with a 60-point higher kind of move. 22,400 on the index.
Yeah, Aster DM, you're correct. It's gone. special dividend, it's gone ex-special dividend, so that explains why that stock is low. 118 rupees is the adjustment, so actually the stock is higher.
All right. Well, Sanjeev Prasad is our market master of the day, Managing Director, Co-Head, Kotak Institutional Equity. Sanjeev, good morning. Great to have you with us here. Thanks very much. You know, you guys recently put out that note, Great Reversal Part 2. And I think it was appropriately timed. You got the... so I just want to start by asking you to explain that note and the underlying thesis. What are you watching? Because what's become increasingly clear, if one believes that interest rates at the end of the day are a big driver for whether we remain in a risk-on mode or a risk-off mode, interest rates perhaps will stay higher for longer. That's becoming clearer has become clearer by the day through this year. Sanjeev, go on.
Oh, this is more of a long-term thematic report. It's got nothing to do with whatever is happening in terms of short-term in the market. So the thesis is as follows. If you look at the 1990 to the pre-pandemic period, let's say 2020 or 2019, you had a period of or a set of conditions which were very, very good for all asset classes, whether it was debt or fixed income or equities or housing. Four factors. Number one being period of declining or low interest rates, and you had a situation where post the GFC, you had pretty much zero interest rates on a nominal basis across all the developed markets, and negative real interest rates. Number two, you had a period of relatively I would say global peace, not that much geopolitical tensions. Number three, you had the massive rise of China. And number four was basically not that much cost of environmental related cost for doing business. And our thesis is, look, that was a certain era, 30 years of very awesome returns based on these four factors. Now what has happened is all these four factors have changed or are in the process of changing. Namely, you are looking at much higher interest rates compared to what was there a few years back. Even though, let's say, the US federal fund rates or the ECB rates would come down from where they are, I don't think they're going to zero anytime in the foreseeable future. Very unlikely, I would say. So your long-term interest rates are going to be higher than whatever you have seen in the past, which means logically your risk-free rate should be higher. Second point is geopolitical tensions much higher compared to whatever you had in the past. So accordingly, you will price that somewhere in your risk parameter. Number three, China clearly, slowed down dramatically compared to how much it was growing in the past. How much of disinflation, deflation it was exporting to the rest of the world. I think that story is also largely over. And the fourth point is now you have also much higher environmental cost of doing business. So broad thesis was, look, you're entering a period where there's a lot more uncertainty, higher interest rates. Logically, the cost of capital should be higher compared to whatever we have been using in the past. And accordingly, a multiple should be lower. But as I said, this is more, in the real more theory. Probably does not apply to the current market conditions.
Okay. Sanjeev, hi, good morning, and thanks for joining in. What did you think of Reliance's earnings? And as a shareholder, as an investor, what's your approach now towards the stock?
Well, I'm not really a shareholder, not allowed to own shares in India, so anyway. Results were fine, pretty much in line with expectation, I would say. If you look at the EBITDA level, exactly what we had, so no real positive surprise over there. Although the mix was a bit different in the sense the O2C business, surprised positively. Was 7% higher than what we had, whereas the outline retail business numbers were a bit disappointing over there. I thought, both on a year-on-year basis and also with expectation, EBITDA was actually lower by about 8%. Although EBITDA was higher on a year-on-year basis, it was lower than our expectation. So that was only, I would say, a little bit of a chink in the overall numbers, but otherwise the numbers are broadly fine, pretty much in line with what we had. It doesn't really change the thesis as far as the stock is concerned. We continue to have a moderately positive view. Remember, the stock has gone up a lot in the last 6 months, I think somewhere about 30%, if I remember correctly, which means the upside is somewhere limited to our fair value, which is now about 3,200 rupees.
Okay, all right. Hi, Sanjeev. Good morning and good to see you in. Sanjeev, I wanted to ask you about the telecom space. Post-elections, that sector is definitely going to be in focus, and the street is already building in those expectations of a tariff increase. Vodafone Idea, who would have thought? People are wondering whether they'll be able to get that 18,000 crores, or they saw demand of more than 1 lakh crore. And Bharti, Industar's Infratel, that stock actually has been the big outperformer. I think it's up 50% in the last few months or so. How do you play this theme? The one that's going to survive and maybe thrive at a later time? Or would you go with the larger name in there, the Bharti Airtel or Reliance Jio?
We have been anyway quite positive on Bharti for a long period of time. The stock has done well. And that was a call earlier that, even if it's a two-player market, I mean, if it becomes a two-player market, obviously it works well for both Bharti and Jio. Now it looks like it will remain a three-player market with, Vodafone Idea, having raised a decent amount of money, which at least, will give it the ability to, invest in the business for a longer period of time. And there's a lot of expectation that post-election you would see a decent tariff increase, and hopefully so, because it's not as if, if you look at the third player, which has actually decent, presence, is making any money, making still large amounts of losses. So it needs a much higher, baseline tariff level for it, to start making some real amount of money. And even if you look at the other two players, which is Bharti and Jio, even they are not making that much money. If you look at on a full, gross investment basis. So we do need some tariff increases. And also keep in mind the fact that if you look at ARPU, where it was in FY16, let's say, for Bharti, it used to be about 180 rupees. FY 2024 probably will end at about slightly about 200, 204 is what we have. So in 8 years' time, you have probably seen something like about 12-13% increase in ARPUs, which is hardly anything much lower than inflation. So, the expectation is that post-elections, you will see a pretty decent increase in tariffs. We are built in somewhere about 12-13% increase for FY 2025. Hopefully that comes through, and that should support, earning momentum for some more time.
Sanjeev, you guys also wrote on two other sectors recently. One is the electricity sector, thermal sort of power. And your contention is that the market is focused on very short-term sort of gains for the sort of coal sector, and this is a time when the price for solar power will keep coming down because of what's happening with the input costs there. Second is the cement space, where you're wondering about valuations and what kind of valuation the market is willing to ascribe to these names. So I just wanted you to briefly detail your thoughts on these two areas.
Sure. See, on the electricity sector, the market is very focused on the short-term developments of, some amount of supply-demand imbalance, which require more of thermal capacity addition, and so on and so forth, which is creating a fair amount of excitement around the thermal generation company. There's also the thermal electricity equipment supply company, which is, I guess, BAIL, only one at this point in time. Having said that, our view is that, look, fine, this is okay for the next 3-4 years, but the move is clear toward renewables, and that pace will accelerate going forward. And if you look at some of the data which we have put on a report, number one point is to look at where solar tariffs are compared to where thermal tariffs are. Solar tariffs are in the range of 2.5 to 3. If you look at NTPC's tariff for the first 9 months of this financial year, that was about 4.6, last about 4.9. So between solar and thermal, it's obviously very clear that solar is much cheaper now. And over time, assuming what we are seeing in global market is a big crash in solar PV module costs, and assuming they remain where they are, even if they go up a little bit, doesn't really matter, because your cost of solar PV modules will continue to be very, very low, which would mean that your cost of solar electricity itself is continue to be on the lower side for a longer period of time. Whereas I would assume your thermal electricity rates will keep on going up. So clearly, we are moving towards a situation where solar will become more and more, it's already very competitive, will become, or stay cheaper compared to thermal for a longish period of time. We will see massive acceleration of solar capacity additions over the next few years. So in that context, focusing on, thermal electricity generation companies or coal companies, etc., without looking at what that could mean to the longer term prospects of these companies, to the terminal value of the businesses, I guess that's the mood of the market. People are just too short term oriented, I guess, at this point in time, without really focusing on the long term issues. And keep in mind the fact that a very simple thing, 2-3 years of cash flows, hardly make up, the current market capitalization of any company, right? and that's essentially companies trading at 2-3 P. So that's where the market, I think, is making a mistake. Too much focus on short-term issues and completely ignoring the longer-term issues, whether positive or negative for a particular sector or stocks.
Sanjeev, you want to quickly outline your thesis on cement as well?
Well, this is a macro debate which we had a long time with investors. Fundamentally, I simply cannot understand how you can be giving 30-35 P for a cement company. At the end of the day, it's a capex intensive commodity business. The asset turnover ratio is very, very low. Probably 1 time for a replacement asset, even less than 1 for a greenfield capacity. You do any math on a bottom-up basis, the P's of this business, etc., cannot be more than 15 to 20 maximum. Even if you stretch your assumptions a lot in terms of growth and asset turnover ratio, margins, and so on and so forth. Yeah.
Got it.
I simply do not understand how people are valuing some of these companies now. Absolutely, basic principles valuations are being ignored completely now.
All right, Sanjeev, we'll take that debate to another day because it's a pretty long one, right? But thanks a lot for joining and appreciate your time here on CNBC TV18. The market is not bad actually, holding on to 22,400. All the action is in the broader market. So the mid-cap index is up about 0.5%. And the sensex is holding almost at that 74,000 mark. But let's do one thing. Let's focus on Hatsun Agro Products. Pull up the chart. I think what the street really likes, it's a good performance, no two ways about that. But what the street really likes is the margin improvement that we've seen this time. The margins have come in at 11.2% versus 8.7% same time last year. So reduction in milk prices aided the EBITDA this time, and the profits doubled because of the margin expansion. To discuss more on this, we have R.G. Chandramogan, the chairman of Hatsun Agro Products. Mr. Chandramogan, always great speaking to you. Thank you for being with us on the channel once again. It's the operational beat which the street really likes, but I want to understand from these 11.2% margins, how much can you build on to it? Do you see further reduction in prices? Can that aid your margins further? And if yes, by the end of FY25, FY26, what kind of margin range are we looking at for the business?
See, last year before we had milk shortage, and the milk shortage has already gone as a cost. And things are improving. And this year we had an enormous flush. Once when we were getting enormous flush, we were able to bring down the cost of procurement expenses because we were able to handle volume. And the production efficiency also came along with it. And the benefit is coming to 11.2%. Normally, January, February, March is our lean month, where procurement will be going down and the sales will not pick up because summer has not come. This time also the same thing, but summer is expected to be very hot. But we are prepared for the summer. We have already done a good procurement of more than 20%, and we are sitting with enough stock to manage the supplies in the summer without any difficulty. And 25-26, we can think of anywhere between 15 to 20% growth of sales and a little better EBITDA margin possible.
Okay, so 15 to 20% growth is a top line you're looking at in FY26, right? That is the kind of growth that you're looking at. But on margins, is it fair to assume that you can build on to about 13-14% margins as well in FY25-26?
1.5% we can increase from the present 11.2.
Okay, so that will be around 12.5 to around 13%.
Around that, we can definitely look at.
Oh, that's an impressive guidance then. So mid-teen growth is what you're looking at on the revenue front, and margins improving by around 150 basis points. Well done on that front. And congratulations, Mr. Chandramogan, on a very, very good set of numbers. But I wanted to question you on your debt. That appears it has gone up marginally, holding at around 2,000 crores. I recall when we charted the last time around, you said that you have some capex that's underway, but in the next 2 years, that debt will come down to around 500 crores. Is that on track? And could you tell us, should we be saying that in the second half of FY26, the debt comes down to 500 crores?
No, actually, it is possible because probably we have got a buffer stock to manage the summer. This is the reason why it is just not the machinery alone. So we will be able to moderate it. The inflow is getting better. Stocks will also get reduced. So July of 2026, the debt can be brought to the level what we want. In case if there is going to be a potential expansion, it may differ. depending on the market sentiment, we may have to do it. If there are no major investments, it is possible to bring it down.
Mr. Chandramohan, value-added products, right, like ice cream, curd, etc., in aggregate, it's about 30% of your business. Could you put out some sort of details for each of these segments specifically? What are you expecting? I mean, will these grow much faster?
The value-added product is a branded product, not just milk, curd, or ice cream. All our products are branded, and our sales is 96 to 97% is branded products, and we have no differentiation. All products are comparatively having a good growth and a better margin. The reason being, we are market leaders in every segment where we are present.
You wouldn't differentiate between, okay, it's all branded, and I take that point. I was just sort of making the differentiation between milk, curd, and ice creams. And typically, we'd kind of sort of call the other two, the latter two, as value added.
Definitely, the segments of curd and ice cream is increasing as a percentage of revenue among the basket compared to milk. Definitely, it is also contributing. But without milk, nothing can happen.
Obviously.
Can you tell me a little bit about the gross margins as well? Your gross margins have now improved to almost 31%, thereabouts. Is there scope to improve it further?
1.5%. Probably that will also reflect in PBDIT and then further down.
Okay, so 1.5% improvement in gross margins is what we can expect. And what's your targeted spend on advertising, if you can tell me? Because, things are picking up, competition has also gone up quite a bit. So in terms of, as a percentage of your sales, how much are you comfortable spending over the next 1 to 2 years?
Approximately 2% we will be spending on the revenue.
Okay. All right, Mr. Chandramohan, also, you could tell us about the targeted contribution from the north-south geographies. In the past, you've mentioned that you would like, Tamil Nadu to decline a little bit. So could you tell us how is the geographic sales breakup panning out and where do you see it headed?
Tamil Nadu today accounts for 52%. By end of the year, that is beginning of the next year, I expect it to be 48% because the growth, most of the growth is happening in the new markets.
Okay, and non-south, how much does it contribute right now?
Sorry?
Non-south.
No, there is no non-south. Non-south is only Maharashtra and also daily commodities. Mostly we are into south.
So it contributes non-south, if I have to call it that, and as you're saying, it's mostly Maharashtra. Currently, how much does it contribute? 15, 18%?
Probably if you leave non-south, it may be about 9%. Because mostly it is ice cream and not dairy products. Except
okay, 9% of the total revenue mix, and you would like that number to move up as well, I think, to around 20% in the next few years, right?
That's right. We have only 2 factories in Maharashtra. The rest of the factories are all here in south. 18 factories are here in south. Only 2 factories we have in Maharashtra.
Okay, all right, Mr. Chandramohan, we'll leave it at that. Thanks a lot for joining in and appreciate your time here. Let's take a quick break on that note. On the other side, Santanu Chakrabarti, the India analyst BFSI at BNP Paribas, will join in to discuss trends in the banking, financial services and insurance space. Stay tuned.
Okay, welcome back. 60 points is where you have the Nifty trading up by 22,396. Lots happening in the broader market with individual names seeing large moves. I just want to pull up GSPL, which had sold off aggressively yesterday. It is seeing a big reversal today. GSPL was not in the mix in the morning when we looked at these stocks. It's up 7% after yesterday's very sharp fall. Of course, the fall for GSPL happened from 380 kind of levels all the way down yesterday to about $300, but it's clawing back to about 325 right now or so. We just spoke with the management of Hudson, Of course, it was up 10% when we started the interview. It's added another 3% since then. So about 13% higher on Hudson, 1160 right now. And Honasa is the other one, 6.5% move, 430 on Honasa is what you have. Now, let's just focus on the BFSI space, the banking space really. BNP Paribas has said that opportunities are hiding in plain sight. HDFC Bank is their top pick with an outperform rating, and they got a price target of 2,410 rupees in the stock. Let's discuss about this name and the broader space as well. Santanu Chakrabarti is India analyst, BFSI with BNP Paribas. Santanu, great to have you with us here. Before we get into some of the nitty-gritties of what you have put out in your report, at a slightly higher level, have you adjusted your forecast of the net interest margins for your coverage universe a little higher in light of the fact that compared to where we were at the beginning of this year in January, I think the markets kind of adjusted to the fact that, we will not see deep rate cuts or anything, if at all, So does that give a bit of a lift to NIMs across the universe, across your coverage universe? Santanu, go on.
Thank you for the opportunity. So, we have to keep in mind that delayed rate cuts are a double-edged sword for them. And you're absolutely right that your FY25 NIMs will look better if you get the cut in October instead of August. But that would take a little sheen of what FY26 looks like. You see, the interesting thing about net interest margins is that it actually bottoms out probably a quarter after the rate cuts happen because of a simple reason that nowadays so much of our lending is repo rate linked, right? Whether it's some of the prime corporate loans, whether it's the mortgages, and therefore some of that prices down absolutely almost immediately, right? So please keep in mind it's a double-edged sword. I mean, of course, rate cuts happen. Hopefully, CASA picks up from there. There's greater momentum in high yield loans. All of those are good things, but just keep it in perspective that rate cuts are not a bringer of immediate joy.
Hi, Shantanu. Good morning and good to see you. What about this toss-up between the private versus public sector banks? You had the private banks that underperformed, but maybe part of that good news with regard to the PSU banks is in the price, and maybe those ratios don't look as good from year on, from the second half of this year. That's FY25. How do you see things panning out?
I think the 1 year forward earnings prism, for better or for worse, has been the driving factor for the banking industry as a whole in their stock prices. If you look at did we have a bad FY24, for example? No. On earnings growth, we had a pretty good FY24. Did we have a equally good FY24 on stock prices? We didn't. And the reason to me is very simple, that the eye was very much on what FY25 growth looks like. So my key thesis is, the flip side of this should play out in FY25, where FY25 in itself may not look great on earnings growth, purely from the margin moderation which is happening. You're not talking about anything else on asset quality or anything else, or growth slowing down, purely margins. Then FY26, as margins moderate back upwards from the cyclical lows, is when you're going to again get a little bit of an earnings spike and probably a re-rating through the financial year. That's been our thesis. Now, as far as the PSU versus private thing is concerned, look, I mean, we just finished an extensive set of meetings both in India and outside, and the appetite and interest in PSU names is really stunning, and it is in some sense an exact inversion of probably what would have happened 5 years back, where almost any questions that you might raise at any point about any PSU or their history, or maybe longer term persisting structural problems, are either brushed aside as things that are getting incrementally fixed in India at a fast rate, or essentially that why are you worried about it now? Why don't we worry about it when the time comes 2 to 3 years from now? And the exact opposite stands true for names like Bajaj Finance, for HDFC Bank, where everything is kind of viewed through this prism of radical skepticism, right? That, is the NIM 3.65? Is it 3.7? Can it mobilize 1.66 lakh crores again? Okay, it may not be able to do it in Q1. But what is the fine number? Is it 1 lakh crore? Is it 1.5 lakh crore? Questions going way beyond this, right? and that was a that's why I'm saying that the opportunities are hiding in plain sight, because you're using two very differential standards on asking questions and valuations for the two subsections of the BFSI space.
Got it. You have tracked the NBFC space for very long as well, Santanu. I wanted your thoughts on what's happening with M&M Finance, right? I mean, they've deferred the board meeting. There is a fraud at one of their branches. From an investor standpoint, a long-term investor standpoint, how do you approach it? Because M&M Finance has been extremely volatile in the past, reacting very severely to any kind of news flow. But your thoughts here?
I don't want to comment on the stock price, etc., because it wouldn't be appropriate given that I don't cover it. But I think broadly, any event that comes out in a financial services business, which raises question marks about processes, etc., will be generally taken fairly seriously by the market, and the burden of proof generally shifts to the company, and that's a challenge we have seen in many cases. I mean, milder cases. Also, we have seen, even in where companies have remedied these things well, stock prices take some time to come back, and essentially the burden of proof will always lie with the company.
In NBFCs, Santanu, what are your top ideas?
So Bajaj Finance is our top outperform. And again, I mean, here when I went and spoke to clients, so many of the investors tell me that, look, Shantanu, there's no way this company can continue to grow high, not because of something on demand or something on competition or something like that, just because RBI won't allow it to. And I found that a fascinating pushback, quite simply because, here's a company that's growing at 34, putting out a presentation where one whole slide in bold letters is, we're going to grow at 25 to 27% for the next 5 years. Now, nobody is, privy to the conversation that RBI would have with any other company. But does it make sense to you that, given that conversation, any company in the world would go out and tempt their fate with regards to the regulator? It doesn't make any sense to me. And so that's where the opportunities are, because if the pushback was on, do you think, Shantanu, that this many customers can be added? Or, is the upsell possible? Or what role will competition play? Now, those are legitimate questions, and of course, people will have different opinions about those things. But some of the stuff is really edge case out there, things that I have heard about large caps in this particular phase of the market.
That's interesting stuff, really. Santanu, did you, in clients, did Geo Financial Services come up?
We don't yet, again, have coverage on the name. I mean, it's still an early stage company. But of course, when clients speak about, competition in a generic sense, they're thinking of every single entrant into the Indian financial markets. And I think that can play a suitable role. Is evaluated, if not in terms of what the business is today, but in terms of what it brings to the table, whether that in some cases may be capital, in another cases may be specific kinds of data that others do not have, and so on and so forth. Or it may be just capital wherewithal. All those parts come up, but not in a recommendatory sense, of course.
Okay, what about Axis Bank coming out with numbers tomorrow? Any thoughts there?
Actually, we are expecting a small disappointment in Axis Bank. Not very large one. Mainly because I think the market's probably building in the consensus seems to be building in slightly higher net interest margins than what we expect, which is a function of essentially how much of, say, their organic CASA plus Citi acquired CASA they're able to hold on for the quarter. My numbers are a little different. Having said that, Axis Bank is my third preferred pick within Indian banking. That because of one very simple reason. It is the highest liability beta name out there. It's 16% short-term borrowings. And short-term borrowings, once rates get cut, will get completely repriced in 2 to 3 month period. So let's say if it's a 150 basis point drop on the overall yield curve, that goes straight to 16% of your funds in a 3-month period. That's a significant number. And it's much faster repricing than what you'll see in most other names.
All right, we'll let you go on that note. Santanu, thanks a lot. Appreciate your time here on CNBC TV18. So that's the word coming in from the banking and the BFSI segment analyst. By the way, markets are still quiet. The Bank Nifty is actually almost in the red. So, you know, there is a little bit of trepidation that you are seeing at the moment. And a couple of these names, L&T, Axis Bank, Britannia, Hindalco, are all down almost about 1%. So some bit of trepidation in the market. It's time for our special segment, Quarter Se Quarter Tak. We bring you earnings expectations from each sector. Today, we'll tell you what the cement sector could look like in this quarter. Nigel, over to you.
Well, for the past quarter, cement demand remained strong, but prices declined. But the lower prices, well, they were partly offset by input cost tailwind. Let's take this piece by piece then. On the demand front, January was weak due to weather and pollution-related restrictions, but there was a growth pickup in February, and March was the strongest month. Volume growth is likely to rebound in Q4 on account of heavy discounting pushed by companies and also a pickup in year-end construction activity. The street is expecting the industry demand at around 8 to around 9% in Q4, which is a big improvement on a sequential basis. For the year, well, the derived volume growth for the industry is likely to be around 9% odd. On a regional basis, South was underperforming, while West as well as Central India, well, they were the best performing regions. Cement prices declined continuously for around 5 months after the price hikes that were taken last in September to October 2023. Realizations in Q4 FY24, well, they're expected to plunge by close to around 5% on a sequential basis, despite being a seasonally strong quarter. Prices were impacted by what? By intense price competition among the larger companies as they were trying to gain market share. The highest decline in prices on a quarter-to-quarter basis was seen in East India, which was at around 8% odd, which was followed by other regions, which is in the vicinity of around 3 to around 5% on a sequential basis. But spot international coal and petcoke prices in March, well, they reverted to December 2023 levels. But they're still 5 to around 14% lower in comparison to the averages that we saw in Q3 as well as in Q2. The operating leverage on a quarter-to-quarter basis and flat to declining variable costs, that's what's going to keep the overall cost for the universe under check, declining by around 4 to around 6% on a Y-on-Y basis, and sequentially as well. Well, Jefferies expects stocks under their coverage to see EBITDA per ton dip of around 110 rupees per ton, that's on a sequential basis, but it will grow by around 125 rupees per ton on a year-on-year basis. The EBITDA per ton for most companies will show a growth, with ACC best placed due to the easing cost, volume growth from the recent capacity additions, and also benign valuations in comparison to its peers. Part of growth on a year-on-year basis is because this EBITDA per ton is coming on a very, very low base. Well, Jefferies has put their expectations of the potential out and underperformers for this past quarter. Among the larger peers, well, they expect the highest year-on-year growth for Ambuja at the consolidated level, while Ultratech and Shree Cement are expected to grow by around 18 to 27% in terms of EBITDA growth. Among the mid-cap names, well, Dalmia could potentially underperform with a sub 10% growth, while JK Cement as well as Birla Corp, well, they could outperform with near 50% EBITDA growth. Well, let's wind this down with a quick valuation check, and the snapshot comes up for you on the screen with the valuations as they stand as of now. Well, given that we're in the midst of a general election activity, we could see some slowdown in terms of demand, but the key to track from here on will be price increases that are pushed through, how much of that is absorbed, and also the demand recovery that the street is expecting in the second half of this fiscal.
All right, Nigel, thanks a lot for that. Naveen Sahadeo, the analyst at ICICI Securities, is joining in now to tell us what to expect. Naveen, Nigel put it very well on what you can expect from the sector this time around. But your thoughts, which are the companies that you think could sort of outperform this time? And in general, what are the growth trends looking like?
So, of course, Nigel did put it very aptly. But from a growth perspective, I think largely concur that in the large cap space, it's Ambuja Consol, which we think is much better placed. There's a low base effect also to that. And in the mid cap space, then we look at JK Cement, which is very comfortably placed in terms of industry superior volume growth and hence the overall EBITDA performance.
Okay, hi Naveen, good morning and good to see you win. Naveen, we have Kesoram Industries, and that's a very small player, and the real play is going to come once it gets folded into Ultratech Cement. But the last quarter's numbers, if you look at it on a sequential basis, just doing some basic math, the derived EBITDA per ton, it declined by close to 200 rupees on a sequential basis. It could be company-specific issue as well that did play out there. But what is your read-through for the industry? What kind of a decline are you seeing on a quarter-to-quarter basis on EBITDA per ton?
Yeah, so first and foremost, we should all take this into cognizance that quarter-on-quarter decline in a March type of a quarter is rare. So indeed, we are looking at a very unusual kind of a busy season for this. And our estimate is that EBITDA per ton broadly for the coverage universe should decline by about 14 to 15%, which is anywhere between 100 to 130 rupees per ton quarter-on-quarter decline is expected.
Interesting. Naveen, what about the cement story now? As you and most analysts as well are expecting, quarter 4 will be par for the course. We're already anticipating a decline in the EBITDA per ton. For the first quarter, elections will slow down activity. For the second quarter, you have monsoons that will play out. So now I think we are looking at the second half of the year. For the year though, given that the second half should be much stronger than the first half of the year, what kind of demand growth are you factoring in? Because we did very well in the first half of last fiscal.
Correct. So typically post-election, our latest precedent is that FY19, your industry grew 13%, but in FY20, it was flat, even excluding the impact of COVID right in the month of March. So definitely not expecting that bad a scenario, and there is no that high a base as well. So against a 9% or 8 to 9% kind of a growth for FY24, FY25, my estimate is more like a 6% kind of a growth. And of course, as you rightly put, it would be mainly from Q2 to the balance Q4, as in for the balance of the 9 months, excluding Q1, which is impacted by volumes or elections.
Okay, all right. Naveen, also there has been this debate about this price increases. You have been tracking it for a little longer than me as well. But we see in April, you have a price increase that's pushed to somewhere in the, towards 10th of April, towards the 20th of April, some kind of price increase. But the better sense you get is, as you approach 20th, how much of it is absorbed? How do you read this? How much of a price increase was attempted to be pushed through? Some reports were suggesting 70 rupees, 80 rupees odd, which is unlikely to take place, right? Because demand is yet to pick up substantially. You have elections as well that are on the offing. So your analysis, how much of a price increase actually got absorbed in April so far?
Yeah, so there is definitely, so far there is a disappointment on the, first of all, the quantum of the price hike itself, and second, also on the absorption of it into the market. And as you rightly put, because typically first 10 days of April have enough and more inventory in the system because of some volume push that happens towards the end of March. So to expect a sharp price hike in first fortnight of April is a challenge. But on the other side, I would put that the quantum has also a bit disappointed to me. They've been talking about some 30, 40 rupees, but in effect, what we're hearing is just about anywhere between 5 to 15 rupees kind of a increase. And broadly, 5 to 10 only has got absorbed so far is what our understanding, which is a little underwhelming.
Okay, all right. Final question then, Naveen, before we let you go. Tomorrow we have Dalmia Bharat that comes out with the serum numbers. And some of these companies, in the run-up to their numbers, they've already seen weakness. If I'm not mistaken, I think Dalmia Bharat is down 15% year-to-date as it is. And today as well, the stock is under some pressure. It has some South play, some East play as well. And Kesoram's numbers were fairly disappointing. How much of the bad news is already in the price? And what are your top picks from the sector?
So I think the entire cement pack is off peak. Most of these stocks, I would say, are down anywhere between 10 to 15%, some of them even more. So no single stock is trading at a peak, market cap, so to say. And that's largely got to do with the disappointment on the pricing front, and which has been there throughout. Right from November, there has been a very sustained decline. So price hikes happening anytime, I think till month of May are extremely critical to give a support to the FY25 earnings, so to say, and hence they are to be keenly watched. And my top pick in that sense would still be an Ambuja Cement, because that's where I think there is enough and more ammunition for cost efficiency to come through, both capex and non-capex led. And also the recent promoter fund infusion that has happened, they are sitting on a big cash, so we would expect industry superior capacity growth also from them. So top pick is Ambuja Cement.
But between the two, some are finding more comfort with ACC because of the valuations. Though we know in the past, Ambuja has always given superior numbers, and as you're saying, volume growth will be superior as well with the cash balance that they have.
I completely agree. Valuation is comforting in case of ACC, but I would still go with playing the ACC story through Ambuja Cement, because I would like to believe that bulk of the expansion is will come through in Ambuja, and the fund infusion also has happened in Ambuja and not ACC. So Ambuja is my pick in that sense.
Okay, and what about the South companies? Some of them have been beaten down quite a bit. Companies like Sagar Cement, India Cement as well. And when they come to a particular level, then we start putting that valuation argument, the replacement cost, the EV per ton. And if you get some price increases that come about, and some of them, at times they rebound very sharply. From the South Pack, what do you like?
So we have, from the South Pack, we cover India Cement and Ramco, of course. And we have a positive view on Ramco, largely owing to the fact that it will have an industry superior volume growth. And of course, the largest beneficiary of any price recovery that may happen in the South and Eastern region. India Cements is largely more of a M&A play. So we have it's completely hypothetical to say if the deal happens or not. So we'll largely, we have a sell rating on the stock, and we'll maintain that.
Okay, let's see when that M&A does take place. Naveen, for the last few years, plenty of rumors in the market that something's coming about. It hasn't yet, but for the time being, we'll take all your points with regard to the cement industry on board. Thanks a lot for joining in and giving us your view. So the past quarter could be a little bit subdued. As Naveen said, they are factoring 100-150 rupee decline in the EBITDA per ton, which will be par for the course. But their top pick will be Ambuja Cements because of the cash infusion. There could be some capacity expansion, and they believe that's the better way to play it from both the Ambuja and ACC twins. For the time being, we slip into a short break with news that the Nifty is holding strong with a 70-point gain. But on the other side, we'll turn our attention to the commodity markets. Manisha Gupta will be joining in.
Welcome back. Well, for now, the market is holding. It's up almost about 65 odd points. The Bank Nifty is up about 114 odd points. Mitesh Thakkar is joining in. By the way, just wanted to mention a couple of stocks. There are plenty of stocks that are hitting fresh 52-week highs this morning. And, some of them include names like Indus Towers, which is at a fresh 52-week high. Bharti Airtel, we've spoken about that ad nauseum. Max Financial is at a fresh 52-week high as well. Voltas, people trying to beat the heat. So Voltas is at a fresh 52-week high. Soba from the real estate space, and something like an Avenue Supermarts is also at a fresh 52-week high. But let's go across to Manisha Gupta now. She'll tell us about the commodity space and what she's watching over there. Manisha, over to you.
Thank you for that, Sonia. Well, I'm looking at profit taking across sectors when it comes to commodities. And, well, yes, why not? Because we've seen most of these commodities go dangerously overbought. And now there is some healthy profit taking coming in. I want to take a look at the precious metal prices, where we have seen gold and silver both decline quite strongly in the overnight markets there. If you look at the gold prices, we saw a decline of 2.5%, and the silver prices fell 5% as well. So this is the biggest one-day drop that we've seen in 3 years, especially in case of gold. So it has retreated from its all-time highs. In sense of numbers, when you look at it, the silver prices did touch a 3-year highs at around $28.9 an ounce. It's come down to $26.9 an ounce in the international markets there. And a sharp fall is what we are looking at in the Indian markets as well. For the gold prices, it has been more than $100 of a decline. So from a high of 2420, we are trading below 2300 right now. So a sharp cut coming in there as well. Well, some of the reasons that you've seen this profit taking coming is one, investors are taking profits and the portfolio managers also repositioning themselves with the kind of value increase in their portfolios because of gold is what they saw. The second point really is about the dollar index and the US yields, which have jumped quite strongly at 106. It's a 5-month highs for the dollar index, with expectations that you could be looking at higher highs because the US data has been on the stronger side. And then it has been about the US Fed officials also suggesting that the restrictive policies could be prolonged and the first rate could actually come in by the month of September. The street is also looking at the Middle East tensions, which have kind of de-escalated. We've seen Israel a restrained response to what Iran did, and the kind of conversations and statements that came in from Israel and Iran also have taken some geopolitical premium off the prices there. Well, there are concerns over vital Middle East conflict even now, and is the reason you could see some support coming in at these levels. But the markets also have reacted to the 2 CME margin hikes that we saw in case of gold and silver, and then trading curve that Shanghai also put across after that one-way rally that we saw in case of gold and silver. But interestingly, there is a report from Citi which suggests that a minor pullback in gold and silver is what you can see by the time second quarter ends. But for the second half of this year, they still have a directional highs expecting in case of gold at around $2,500 an ounce. And for silver, they're anticipating $30 to $32 an ounce on the higher side. So the direction hasn't changed. This is just a profit taking.
All right, thanks a lot for that. Well, let's do one thing. Let's go across to Mitesh Thakkar. He's joining us now. Mitesh, before anything, I wanted your thoughts on Tejas Networks. Huge move over there, 20% rally. Do you think the street can build on to those gains? And what are the other stocks that you're looking at?
Yes, Sonia, I think what a breakout, and that happened with the gap. And I think we discussed that, I discussed that with Prashant earlier in the day also. I think I'm looking at a target in excess of 1150 over here. 1150 to 1200, I think is the near-term target. But I won't be surprised to see eventually the stock continuing its rally. This looks like a very strong momentum breakouts. If somebody's accumulated in the last few weeks and is holding, I think just hold on. 1250 should be, 1200 to about 1250 should be the logical target, but there's a good chance of us seeing an extension. And therefore, we can even talk about 1350, 1400 zone. So very, very positive for me on Tejas Networks.
Okay, all right. Hi, Mitesh. What about other individual stocks that you're tracking for a 10 a.m. call?
Yes, Nigel, I have a buy on Grasim now. The stock, is just trading around the pivot levels of 2315. We had a high of 2312 today, and it's 2308 now. So buy about 2315, 2320 range. Keep a stop below 2295, and look for a target of around 2380 to begin with. And the other one is HL Tech, reversing from extremely oversold levels. Buy here with a stop below 14 and 1469, and a target of 1525 can be looked.
Thanks a lot for that, Mitesh. Well, Mitesh gave us the technical check on Tejas Networks, but Rima joins in for a quick fundamental analysis on those numbers. Rima, beautiful looking screen.
Oh, absolutely. Now, Tejas Networks is a company which makes telecom equipment. So it caters to wireless and wireline network equipment products. And this company has reported some very strong numbers. So in a span of 2 days, the stock is up close to about 40%. Even yesterday, it had a surge of close to about 17 to 18%. Now, revenues for the company have crossed the 1,000 rupee mark, 1,300 crore. It's up close to about 350% on a year-on-year basis. And even on a quarter-on-quarter basis, revenues are up 137%. The company's reported profits after 5 consecutive quarters of losses. EBITDA crosses 300, while the profit is now at 150 crore. And we haven't seen such numbers from the company in a while now. The order book continues to remain strong and more than 8,000 crore as of the last quarter. The cash on the books is about 641 crore rupees. So all that is also adding to the optimism.
Okay, what about Vodafone Idea and Indus Towers, Rima? The moves there are also pretty good.
Yeah, so remember Vodafone Idea, despite all that news about fundraising, there was skepticism. So since the FPO news was announced, we didn't see the stock rally. In fact, year to date, Vodafone Idea is down 15%. Bharti and Indus Stars rallied because they believed that if Vodafone Idea survives, they gave it a probability, then it will benefit the other players. So Vodafone Idea has been a big underperformer on a year-to-date basis, and maybe now that the FPO is successful, we could see that reverse. Now, about the FPO, very strong subscription. There was skepticism whether the retail participants would participate in the FPO, but even retail got subscribed fully. The HNI portion was about 4.5 times, QIB 19 times, and if you remember, even the anchor book at more than 5,400 crore rupees had some marquee investors like UBS, Fidelity and GQG. So this massive 18,000 crore FPO got its subscription of close to about 7 times on the whole. A successful FPO is positive for Vodafone Idea, very, very important, because one, it paves the way for the bank lending, raising money of 25,000 crore rupees from the bank. Two, it provides the company growth capital to invest in 4G and 5G, which improves its market competitiveness, which can help the company bring down its arrest its subscriber share losses. On Indus Stars, and Indus Stars is a stock which has rallied 80% in this year itself. CLSA further upgrades it to a buy from an overweight. They raise the target price to 450. They say that even though the stock is up 150% in the last 12 months, it's trading at a 60% discount to peers. So valuations are not expensive in a relative context, relative global context. And at their fair value of 450, the stock is still at a 45% discount to global peers. And of course, an improved financial position of Vodafone Idea will benefit Indus Stars the most. Back to you.
Okay, all right, Rima, thanks a lot for that. Just take a look at that stock flying away. Telecom, clearly the sector of the day. Vodafone Idea going to the market asking for 18,000 crores, or even X of the anchor book. It got subscribed close to around 7 times. So massive subscription out there. The street believes that there are going to be 3 players from here on. Indus Stars was piggybacking on Vodafone Idea. And if it survives, then it's good times for Indus Stars as well. So clearly big moves out there. A quick check on a few stocks in the broader markets. So just pull up Genus Power. That stock has moved to the high point of the day. HPL Electric as well. That's the other name in there that's moved quite well. It spiked up in the last few minutes. Now it's locked actually with a gain of close to around 10%. So quite a few of these names are building on. Some of them have done well in the last few days, and they continue to build on as well. Markets holding steady with an 80-point gain. For the time being, we slip into a short break. On the other side, we'll be joined by Mr. Radhakrishnan, the whole-time director and CEO of Kesoram Industries. We'll discuss the past quarter's numbers and what's the way ahead for the company as well. You stay tuned.
Welcome back. Well, we're just looking at some brokerage calls on Reliance Industries post the numbers. First, let's get the stock up on the screen. Most brokerages actually have a bullish view on Reliance Industries after the numbers were above street estimates. Jefferies has raised their target price on the stock to 3,380. Bernstein has a target of 3,160. Morgan Stanley has an overweight with a call at 3,046, while Elara Capital has actually raised their target price to 3,479 and they have upgraded to an accumulate. Now, the reasons for the bullish views largely because of Jio. Jio's performance was quite strong. It was ahead of estimates on the higher average revenue per users because of an improved subscriber mix. The oil to chemicals business was also very strong this time around. Profitability rose because of the robust refining business. The Jio net subscriber additions was also quite robust, almost at 11 million. And retail, although it was a bit muted because of competition, the margin improvement is something that continues. The other big positive for Reliance Industries is the net debt has fallen by 8% year on year, coming in at $14 billion. And now that the peak capex for the company is over, according to analysts, going forward as well, they can, reduce their debt further. So lots of positives in the numbers, and hence a lot of brokerages have raised their earnings estimates and target price on the stock. But standard disclaimer, Reliance Industries is the owner of the channel that you're watching.
All right, Sonia, thanks a lot for that. Well, let's focus on a few stocks that are moving around. Alchem has moved to the low point of the day, so that intraday chart should come up for you on the screen. SAIL as well, had a bit of a breather yesterday, but the stock has resumed its up move. Now it's up close to around 2.5%. It did see some profit taking, but now it's moving up as well. From the metals pack itself, Indian Metal and Ferro Alloys, that stock as well has seen a 10% correction from the recent peak. It had given a dividend of close to around 15 rupees. But in the last few minutes, that one as well is moving up. And Sterling and Wilson is now locked in upper circuit. It's up close to around 10% or thereabouts. Well, as promised, let's get chatting with the management of Kesoram Industries. The past quarter numbers are a little bit disappointing. The good news is the rayon and chemicals business, it turned a bit positive after many, many quarters. To understand what went on, Mr. Radhakrishnan, the whole-time director and CEO of the company, joins us on the show. Hi, Mr. Radhakrishnan. Good morning and good to see you. Well, let's run through a couple of factors. First, on the cement part of the business. What's the timeline for this deal that you have done with UltraTech Cement? By when will the cement part move to UltraTech?
So there are a couple of more approvals required. The CCA approval is in place, right? Now, few more approvals are there. The expected time, we should wait for anywhere between September to March, it may happen.
Okay, second half of the year is when you see this take place. Great. You don't give the volume numbers, but I think, back of an envelope calculation is suggesting that for the past quarter, you did around little more than 2 million tons approximately. And for the year, you did around 7.5 million tons. I recall at the start of the year, you were talking about 8 million tons. Then you scaled that down to around 7.6. It appears you're a little shy of that. Is that correct?
Yes, absolutely right.
Okay. And the EBITDA per ton, for the past quarter, that's actually seen a sharp correction. Because at the end of last quarter, you were more than 600 rupees. Then you were telling us maybe for the year, you'll do something around 600 rupees odd on an average. But you've ended the year with the EBITDA per ton of around 400 rupees. Is that correct? Because pricing was weak. I think that played spoilsport.
About 500 plus, I would say. Maybe your calculation, other income you are deducting.
No, 500 for the year, right? 500 for the year. And for the past quarter, it was around 400.
Yeah, correct. For the past quarter, it is 449, right? Q4 was a very bad quarter from a realization front, so far as we are concerned. The markets we operate had a tough demand situation and liquidity to turn tight in the markets. That's where it was.
Okay. So since you're talking about the price correction, tell us what was the price correction in quarter 4 in comparison to quarter 3? On an average, we just had a discussion and we are working with around 5% sequential dip. What was the dip that you witnessed? And also in April, there were attempts to push through a price increase in markets like yours, South and West. Tell us what is the quantum that you all pushed, quantum that was absorbed as well?
So between Q3 and Q4 sequentially, on an average, 10 rupees to 12 rupees is the drop per bag. And as March set in the month of March alone, if you look at Q3 exit and March month, it is about 18 to 20 rupees per bag. The prices started falling steeply in the month of March. Now, yes, there have been attempts to increase the price. So far, in some pockets, 5 to 10 rupees has been absorbed. That's where it is.
Okay. All right. So small price absorption is what we have seen. What about the debt? Mr. Radhakrishnan, for last many quarters, I was asking you, Mr. Radhakrishnan, when does the refinancing take place? When does it take place? Finally, it took place, I think, somewhere towards the end of February or March, which will be good news once, this asset goes to the new owner. But tell us, what will be the total quantum of saving on this kind of, because of this refinance that's taken? And more importantly, once a cement asset moves out of the books, in Kesoram Industries, what will the debt be? What will be left behind?
So 220 crores will be the interest saving, 220 crores plus will be the interest saving per annum on the refinancing. The debt which will be left in Kesoram will be zero post the cement asset and the debt moves out of the Kesoram balance sheet. I'm saying Kesoram standalone. Signet, yes, the subsidiary, when it gets consolidated, there will be a 220 crore of debt. That's where we are.
So we look at it on a consolidated basis, sir, because the big asset is moving out. On a consolidated basis, the remaining business basically will have 220 crores of debt. And for the debt that you have, it will be around 220 crores of savings as well, interest cost savings. We got that. Now we have to focus on this pending business that you have, the rayons and the chemicals business. Good to see a bit of a turnaround. Give us a few details. In the past, you indicated there has to be some fund infusion. Then this asset can do, say, EBITDA of around 60 to 70 crores. When is that fund infusion coming? Point number one. Point number two, give us a guidance for this year. What kind of an EBITDA number we should work with for the rayons and chemicals business?
So the EBITDA number for this year is a variable of the time at which the fund is getting infused. So no sooner the fund gets infused, this business will clock an EBITDA of 60 crore per annum. So pro rata we have to calculate from the time of fund infusion. The question is when the fund will get infused. We are working very closely on that. Somewhere before December, the fund should get infused.
And how much of the fund will get infused?
So what it takes, the way to look at it is we want to run it debt-free.
Okay, so around 200 crores. So around 200 crores will have to be the infusion then.
Sir, 200 crores and whatever is required to scale up the business, which is under evaluation, will also get infused.
And who will put this money? The promoter entity will put the money. Will you get a strategic investor? Will there be someone else who's interested in putting money? Because otherwise, this business, Mr. Radhakrishnan, it's been struggling for many, many quarters. And the street has only been interested because of the cement asset. Now they'll want to know what is left. So give us a couple of details then. Promoter puts in money, strategic investor comes in. Who is it?
So ideally, it could be a combination of both. It is too premature to say that. Right, we will keep you updated on that. We are working on all fronts.
Good speaking to you, Mr. Radhakrishnan. We have some idea about how you see things pan out, with regard to the remaining part of the business. And thanks so much for giving us some inputs on the business that moves out, which is the cement business. But we can take some derivation with regard to what's going to happen, particularly in the South and the West market. Thanks a lot for joining in. Well, on that note, though, we'll wrap up on this edition of Bazaar. Chartbusters comes up next. You don't want to miss it.